She's still stuck.
Oh, there it goes. Connect to encoder. Okay, now go turn it back on. Okay.
Yep.
So it
Third time's
shows
a charm. Well, now it says live.
There we go.
What,
Third
did I
time's
just have to wait for like you to watch me do it? Is that what it was?
No, you probably didn't wait long enough.
All right, let's do that.
You
with
probably
X.
clicked it, turned it off, and then turned it right back on. That's
Error
still connecting.
creating broadcast. Let's go check out. Got 3 minutes. I don't think anybody's here yet, so nobody's here yet. We got time. We can crop the video once it goes live.
So let me check on X.
No sources yet. Okay, fine.
It says it's connected.
Oh no, people are joining. Or that could be X. Maybe X is figuring it out. Hey Matt, we're having like weird technical things. It's Brian's fault. He broke AI this morning.
Only one of them.
That was quite the oh man. That was something else.
I could remove X and reconnect it, I guess.
Yeah, here's the, if you go to a new live stream, there's a RMTP key and everything. I don't know if it's any different.
So you shouldn't even have to do that because X is part of... Oh. That's weird.
X is part of O?
Well, when you go into manage destinations, X was part of the destinations. All you had to do was log in and it collected all that. But it's not, it's got YouTube, Twitch, and Facebook now. And locals. X isn't in there anymore.
Wonder what happened. Did they piss off Elon Musk?
So let me remove it, I guess.
What happened? Do you think like bigger channels would probably notice that instantly?
Well, there it is. Oh, it's not in there because it's already part of it.
Maybe like reconnect it?
Yeah, I'm doing that.
You have exactly 34 seconds to make everybody happy. No, wait, 30. No, wait, 26.
Okay, reconnected.
No. Oh, really?
Yep.
All right, hang on. I'm gonna do it like this so you can see too. All right, so the toggle is off. Now we're gonna click the button because everybody likes to see me click buttons. Error creating broadcast. It's too late. We gotta go live. Hi.
We're live.
We're
no
live.
X.
No X. For some reason, we were having an issue with X today. They maybe all that stuff I've been saying about Elon Musk made somebody over there mad. We're gonna find out.
Talking bad about him, man.
I wasn't talking bad about him. I was being truthful, mostly.
Talking bad about him is what you're doing.
Hey, we've got a one heck of a AI thing that took place this morning. we were trying
Fun
to get
with AI.
this thumbnail that AI helped us make, And it came up with this, like, I almost want to go to the Office program and show people the chat because it's so crazy. Like it started talking about the Fermi paradox and why God exists and all this crazy stuff from like one little screenshot that I shared earlier in this week. And it just went off the rails. Brian asked him to like put us in this image, and it did it one time, and then it just went crazy after that. Like AI went nuts. So
it would not give me the image, I'll tell you that.
No, it would not. But we actually made a stock purchase. I kind of did it and then told Brian, but I don't think he's surprised by it. So
nope.
No, that was pretty well. Yeah, I think he's got me figured out. Well, how long did it take? 15 years? 15 years later, Tom sort of makes sense for all of us. Today, if you guys want us to take a look at particular stocks, this would be a good day to do that because we made a purchase. I want to justify and explain the purchase and say, ha ha, I told you so. But Intel, at least until they publish a profitable, ladies and gentlemen, the IT guys. That's the story of an IT guy's entire career. That's how this works. It's just broke. Go fix it. What's broke? I don't know. Go fix what? I don't know. Have you ever looked at it before? Looked at what?
Figure it out.
Figure it out.
What does it do? I don't know what it does.
Now
you guys need to figure that out.
We have this Google thing that we used to use. If you're not in IT, if you don't use Google, you're not in IT. Now it's like if you don't use AI, you're not even employed. It's a little different. But then AI hallucinates, so there's that. Was it Campbell Soup? Yeah, Campbell Soup was one. We wanted to look at Campbell Soup. It was not Campbell Soup, just so you know.
That's not what we bought, no.
That's not what we bought. If you look at our portfolio, you can probably figure it out. I'll do it by cost basis, make it a little easier. And if you're on your cell phone, I'm sorry, you got to squint at it like, what? Just tell me, you jerk. Oh, we'll tell you.
We'll tell you, all right.
I'm highlighting it. That's the one. That's the one.
People.
People. Are you still working on X, or should I just get going?
We'll tell you. Go get going. We'll figure out X later. We'll fix it in post.
I don't know if we can fix that in post. We'll probably just upload it to X. I grabbed some Comcast this week. Yep, that's actually a pretty good deal. I didn't do as much personally Comcast as I thought I would, but PayPal, they just everything lined up. It's kind of like you see love at first sight, but this time it's she's been your best friend for 15 years or whatever, and you didn't realize what you had until she's like, oh, that guy's cute. Then you get immediately jealous. Look at these guys. They had a rough run.
They did. Still are.
4 years.
And they're up a little bit.
Now they're paying a dividend.
Yeah.
So I have to explain our title. How do you want to explain our title, Brian? Like, what if you were in Tom's head? What would you tell people about the 20% per year? Like, why would we post something like that?
Because it's the receipts. We brought the receipts. That's it. That's the crux of it. We have made 20% over the last 4 years, every year consistently, which is not necessarily a brag, but it's the truth. It's not a lot of people can say that they've done that year after year. Maybe one, maybe two, but not every year. And we probably can't do it every year after this, but we're doing good.
Yeah, I don't want to brag because like the moment that I start doing that, you'll have something happen. Now, the thing I want people to look at is this $50,000 here. So out of $100,000 net contributions for $98,000, 50% of that is gained in profit. So pretty hard to argue that point. How did we do it? Well, you have to stick around and kind of see how we look at the stocks. See how you can maybe do that too. It just takes time. It takes some discipline too. And you have to really take an approach with the investments that there's going to be struggles. And if the stock goes down, you can't like panic sell and jump out of the ship.
Honestly, it's a process. It's a stead and true process. We didn't make it up. It's nothing new.
Yeah, we made
But
everything up. It's
you
all
just
me.
have to. We figured it out. Nobody else knew this before us.
Nobody
It's,
knew.
you just got to stick to it. That's the problem. A lot of people get scared and sell or buy things because it's exciting. You just got to stick to your laurels, stick to your process, and it works.
That's the hardest part for me for this channel, because like what we're talking about is not an exciting thing for somebody to just sit there and say, oh well, you know, you want to invest $1,000. Okay, well, I want it to be $3,000 next week. Well, it'll be $3,000, but it won't be next week. It's going to take a few years. And if you look at this, there's proof. Here's some proof. It does work. And not only that, it's durable. If you look at the investment income, so we bought PayPal. So for Matt, the income went up to $377, which is only like a $2 gain. That's fine for us. We're trying to get companies that produce products that people have to have, that they have what's called a value mismatch. So basically what that means is the narrative is saying this company is terrible, but the finances are saying something different. And it's actually kind of hard to go through and find those businesses, because oftentimes you're looking at, like, for example, Intel, what was it, about a year ago, all the news was just awful. So you're kind of running into a building that's on fire and everybody thinks this thing is broken, and you have to pick up the pieces and go, oh, well, this one still works. And then be able to hold on to it while everybody's still running out of the building and saying, oh, you're stupid for holding on to that company and this isn't a good business. And then you make these outsized returns. Everybody's like, well, how do you do that? How'd you do that? It's like, well, there's more to it than emotion. And the emotion plays a part, but it has to be like stoic and stubborn. It's not like, oh, you have to be this super crazy genius. You have to be able to do all these super smart things. You just need to be consistent, and you need to be like disciplined about what you're doing and why you're doing it. So, like I said, we're looking for those companies that are undervalued, that have good finances, that produce products, or are in a space that has a good defensive moat. In other words, if somebody came in tomorrow and said, where are your competition? Their answer is good luck, not oh no. So in this space, if you look at our stocks, I kind of go through this every week. You can see what we own, and you've got a lot of big companies in here. There's a couple of them that are going to be doing some spinoffs pretty soon, but like Coca-Cola, Chevron, pretty much a standard bucket of the dogs of the Dow, or the blue chips for the most part. The check of this, or the catch of this, is that we're typically buying them on the dip. So you buy them on a dip. Like Campbell's Soup right now is really hot on my radar. General Mills is actually too. Trying to look at the companies that have this bad narrative, that have a good defensive moat that can turn it around and then pay us outsized returns later on. Now, we're talking like a year away. We have plenty of examples. Intel's an example. 3M's an example. AT&T is an example. Pretty much all these stocks here are really good examples. We had Comerica and Honda. Those are all examples. So now we have 5 or 6 different examples over the course of a period of time, like how we're making more than 100% gains on these stocks, and how we're able to do that while this number here, the one that we actually care about, this income, we believe is durable. Now, if obviously the apocalypse happens, this number is going to not matter. So in most cases in society, if something happens, we can rely on this to at least pay some of our bills. So the first thing that you want to build is a income floor. Everybody tries to say, how much money can I make? It's like, no, that's the wrong mindset. The first mindset you need to have is what survives if something bad happens. Because inevitably something in life does happen. And that's what you need to prepare for first. And nobody does it. Everybody plans for, well, this is my car payment, and I can afford that bill right now. Oh, really? Okay, can you afford that bill 2 years from now if something happens? So we do the same kind of mindset with our stocks. So you got this investment income here, you got this monthly average, but that's not being taken from high risk positions. That's being taken from companies that are paying, most of them, in fact, probably I'd say all but two, are paying these dividends from the result of profits on a product. And I would rather make a penny off of a product over a long period of time than to try and make a whole lot of money off of a business that is like their equity, like the storefront itself or the people. Like don't take profit the wrong way. So the mindset behind like why we do better than most people in the stock market. Now the smart money, the professional investors, they do okay. So usually we're in parallel with them or a little bit better in most cases. But this is kind of why we do it. When I look at buying a stock, and I've been trolled for this before, Brian's seen me spiral because of this a few times. Ooh, I should probably mute my phone. But why we spiral is because when people call me, now, almost lost my train of thought, is I will take a look at like, let's see, Intel here. When I buy a stock, and Brian does this with me, we see it as a loan. Like they got to pay us back. It's not technically a loan. Technically, I can buy the stock, it can go to zero, and they don't have to pay me back anything. It's a way for them to get money to fund their operation without being like required to pay the money back. When I see it as a loan, because it's my money, I worked hard for it, I want to make sure that they can pay me back. I want to know how they're going to pay me back, roughly how long it's going to take, and what they're going to do to make sure that they can pay me back. I don't want false promises. I want numbers. And when you treat an investment that way, you care about how the business does. You care about how well they treat their people. You care about like the product that they make. You don't want them making crap. So it's a different mindset. And a lot of people get into investing and say, well, buy low and sell high. It's like, no. Sure, buy low, but sell when it's profitable or when the numbers don't match up. And in Intel's case, we did exactly that. And this is one example of half a dozen we have in our own channel. When it got to here, I looked at their balance sheet, we looked at their numbers, and we said, doesn't look like they match up to what their valuation is. It's the same thing we did a couple of years ago, 2 years ago, when they were scraping the bottoms. Like, wait a minute, their book value, they are worth more than what everybody thinks they're worth. In fact, if you sold all their stuff, you're going to have money left over. So we bought them down here. They went way up. When they got to the point where they were really high, we looked again at the finances and said, well, wait a minute, they're running on credit right now because they're not exactly profitable yet. Now they went back down. Now, looking again at, maybe they're a good value play. But there's a story behind this. There's a financial story behind this that ties up to their numbers that says, to me, when a company is a good buy and when it's not. Most people don't look at investments that way. In fact, they don't even look at their house or their car payment that way.
Yeah. Now, to add something here, if any of you have read The Intelligent Investor by Benjamin Graham, all of this that Tom just said is in there. He's basically stripping it from the chapters and giving it to you. This is in there.
I haven't read that book for like 20 years.
If you haven't read it, go read it.
Don't they do updates to that book every so often? They probably have like an updated version by now.
I think the last one was 2004.
Yeah, so I probably a bit deja vu for me. So it's the cool thing about getting older is when you get older, you watch a movie, it might seem vaguely familiar, but it's always new and fresh.
It's like, have I seen this?
Do I know what this is? I might have seen this. So you have to treat this stuff as a actual loan, like as an investment. Like you believe in the business, you believe in their products, you believe in what they do, and you know what they're going to do to pay you back. When you do just that one thing, this one neat trick made me $5 million in 3 seconds. No, like when you do just this feet pics online for all those millennials.
Feet pics? Oh, yeah.
Feet pics. No, when you do this one thing, when you treat your investment that way, it eliminates like 95% of the stocks in the entire market. And a lot of demographics eliminates the remaining 90%. So you're down to like maybe 100 companies, maybe 150, depending, that are actually good investments.
But it also eliminates some of the stress and FOMO as well.
For me, it does and it doesn't. I see like all the hype, and I have a tendency to try to get caught up in it. It's like, no, don't buy that. Don't buy that. Bad Tom. But it's really
I should
there's
short
so much
Nvidia.
of it. Nvidia, yes. I'm curious because I've been told that there's been a giant
They've been faltering.
yeah, like the tech sector's been bleeding lately. So I'm curious. I don't think
Not
these
terrible.
guys, yeah, I don't think they really got hit that hard.
Well, they're 5 trillion market cap. 5 trillion. I
Good
don't think they're hurting.
Lord. This is to your point that you made a few months ago. Every time somebody gets paid, they put it into a mutual fund or an IRA or something, and NVIDIA gets some of that money.
Yeah, it's
Because
down from
there's
their
such
high,
a
but
huge
that's-
percentage.
Well, their enterprise value is still 4.98 trillion, 5 trillion. So it's they're not.
I can't brain that.
They're
My
not
brain
doing
doesn't
that
go
terrible.
that high. My
No.
brain goes to 2, and then I get stuck.
5 trillion. I've got a pretty good imagination, and like billions of dollars I could spend easily, but 5 trillion?
You could
Like
spend
what?
billions of dollars. Brian can spend
Oh,
billions. What would you
I
buy?
could spend billions easily.
Not women. What would you buy?
I'd buy an island. Then I'd put a resort on it, and then I would probably get some sort of economy going there and manufacturing, and so I could build and grow the things that we need and have it self-sufficient.
Just in
Then
time
I'd-
for climate change to flood the island.
And then I'd probably spend the rest in pumps. So when it does flood, it just pumps right out. Engineering so it doesn't. It just directs all the flood into channels and through the other side of the island.
Miami's trying to do that. They spent like almost $1 billion now on pumps and services to try to keep the salt water out of the bedrock. So the limestone doesn't dissolve. It's
trillions?
sort of working. Sort of.
I don't know if I could spend trillions.
That's too much. Like that's where you could actually physically move entire countries.
Yeah.
Like
With trillions, I could buy a country. Not just an island. I could buy a country. I could buy Spain.
And every time you would be every time you'd fart, somebody would like analyze it. Oh, what did he have for lunch today? I wonder.
What would it be? The Braveheart for Ireland? It's my island. I bought Ireland.
Brian's catchphrase is going to be potatoes for everybody. Potatoes, and you get one, and you get one, and these are called French fries. And then he gets chased off the island.
It's my island.
Yeah, they'd
bought
still
it.
chase you off if you went on the island talking like that.
Brian's Island would need a millionaire, a professor, a skipper, and first mate, and probably a movie star.
I'll be the skipper, and then the movie star, and then I'll go back to the skipper.
And Marianne. Somebody named Marianne.
I do not see. So I'm looking at this evaluation, and I'm on the struggle bus, man. I'm trying to understand why. This has got to be like FOMO money. It's kind of like Warren Buffett says, giant casino with a church on the side. That's what this is. I like NVIDIA as a business. I just don't understand the stock market's like evaluation of it. Look at this here.
They're a
Look
good
at the
company.
equity.
They make money, right?
They're buying back their shares, so they're doing that. That's good.
Yeah.
See, the managers know what they're doing.
It's not like they're a bad company. It's just, are they a $5 trillion company? No. That's
Maybe.
really
Become a $50 trillion company and laugh in your face, Brian.
well. Maybe if AI becomes a real thing, AGI happens, and Nvidia's the only one that makes them, and AI decides that they're the ones that should survive. Sure.
They're going to call it the pacifier instead of the Terminator, just to keep people at peace while they destroy human civilization.
Yeah. There's already a movie called that, though, The Pacifier.
Look at this. So the operating income is a lot. It's $130 billion, which is good.
That's very good.
Total
That's
revenue.
a lot more than 10.
it's less than 5% of their market cap. That's ridiculous. Let me go look at one that's highly contested too. Let's go look at AT&T. We could look at Tesla too. They're pretty. Oh, hey, check it out. AT&T is
coming back.
Yeah, I should have bought them. Oh well. Maybe not. Maybe not. Let's go look at their market cap. If you guys have questions about like how we do this, please ask, or just sit tight and watch, and we will. It'll be like osmosis. You'll pick it up. I'll use a lot of big words to make me sound smarter, but then you realize, hey, he's just using big words to sound smart.
Just stringing them together.
They don't actually mean anything. So let's look at, this is AT&T. So their total revenue, it's still down.
$25 billion.
But their net income, go look at how much they got left over. That's actually doing really well. That's back to 2021 levels. So they're actually improving. One thing that we had a problem with them with liabilities a long time ago. One thing that you can see here is they're still bleeding upwards in liabilities, and it's hard for a company when you have this kind of debt. It's hard to absolve it when you're a huge infrastructure business that's highly regulated. So I don't think they're doing a bad job. I just think it's the Titanic. It's going to be hard to turn it around. But if we go to...
Matt said, I just went to the public library app and borrowed the audiobook of The Intelligent Investor. Thanks.
There's a couple of good books like that out there. That's one of them.
I think I've listened to that because I've got that as well. I've listened to it maybe 8 times. It's a hard listen.
Yeah, it's because there's a couple chapters where they actually compare companies inside of it, and they get through the numbers. So I can't imagine like you trying to listen to that and build this mental chart in your mind palace. So like, how would you do that?
I was doing it while I was driving, so it's like sometimes I got lost in thought following the numbers. But yeah, it's a good one.
Brian gets cut off. Hey, your PE ratio sucks. The guy's like, what? So AT&T enterprise value, $301 billion. And when we go and we look at their gross revenue, because that's what we did with NVIDIA, all the money they make, it's about 30%, give or take a few percentage points. But like when NVIDIA is less than 4%, let's say like 2 or 3% of their market cap and their total revenue, and AT&T, which is highly contested anyways, is like 1/3 of that. Something's wrong, man. That number doesn't line up. So do I think NVIDIA is a bad company, a bad investment? I don't think they are, and I don't think they're a long-term bad investment, but we're talking like 10 years out. Do I think they're overvalued today? Personally, I do. I think today they're a little bit overvalued, not because the business is bad, but because people are just jumping on. They want on the bandwagon. But like I said before, if a company gets money from you, they have to do something with that money. Now they could, and there is still upside for them because they could just keep increasing their contracts, and the demand is definitely there. I mean, data centers need it. The AI is ramping up. There's a lot of stuff going on. They're working with Intel now. So like, would I short them? No, because there's a lot of upside potential still too. But do I think for a value investor, that's a good play? Not yet. Not yet. If you want a long-term growth stock, well, at $5 trillion, I think that's not a growth stock anymore. That's an industrial stock. Mm-hmm. That's a big company. But let's look at, so if NVIDIA is trading at this, let's look at Microsoft. Why not them? This portrays to our thesis behind why we do and how we do what we do pretty well. So Microsoft is the opposite of that. Their earnings per share is still massive. Still big. Still
and their
high.
stock price is still high. It's down from where it was, but it's still, I mean, $350, right?
Yeah, check this
$380. So it's still up there.
That's a big swing, though. I mean, so think about it. If you had the stock, they've treated you really well over a long period of time. But when they're going through their low period, you're not having a good day.
Yeah, especially if you held it from the 90s or early 2000s.
Yeah, I mean, look at this one here. This is what are we talking? 2021. So from about 342 down to 214. Oh. Oh, I just lost 50% almost. Yeah, that's how these things go with some of them. But like, we don't try to buy based on that. When we just looked at NVIDIA, it was 2%. So Microsoft is still massive, 2.86 trillion. It's almost a $3 trillion company. And if we go look at their earnings, just to kind of get an idea. Now, there's metrics for this, price to earnings and earnings per share and their book value. Like, you can pull those up, but a lot of people are starting out at this. They don't know what those mean. We did videos on those. Probably should put it in our Kajabi account and like actually do real training videos where we explained what that stuff does and how it matters to like an investment. But most people, just getting their balanced checkbook is like the hardest thing. So start there, then work on this stuff. But like, if
People don't balance their checkbook anymore, man.
They should, even if they don't have one.
People don't write checks anymore, Tom.
Most business owners I know do.
You got a checking account, but you don't actually write a check.
There's no fees. Businesses still do it, but that's about it.
Yeah.
Because it's like, 3%. If you're a $100,000 a month company, then that's a lot of money. Adds up. So these guys here, total revenue, $281 billion. That is about, it's just under 10%, but that's a little bit better than NVIDIA. That's a 10%. But think about where they were even just, I don't know, a few weeks ago. So August, it's 2020. Let's go here. So their high 3 months ago was $466. And now they're trading at 384. So they dropped a bit, which made that multiple a little bit less dramatic. But they were trading probably about 5% to 6% of what their gross revenue was. So you really have to look at, as far as a business, like what a good investment is, you really have to kind of look at the foundation of what their product is, how much they're making, and what the market thinks. And unfortunately, news can drive the market. So the Strait of Hormuz and Iran thing, it's open. Oh, it's closed. No, wait, it's open. Oh, no, wait, it's closed. And then the stock is like, nobody knows what to do. Same thing when the Fed comes out, they do their beige book or whatever, and they post this is what we're going to do with interest rates. The market moves based on that. You should not make your stock decisions on that.
Right. And people do, unfortunately. And that's why the new Fed chair came out and said, well, we're not going to actually put it out now. We're going to wait 3 months and put out a report just so it doesn't affect the market.
I think it's funny how like a new Fed chair gets elected from the existing people that work there, and they think, oh, he's going to be different than the last guy. They probably
a little bit different, I guess.
Maybe a little different, different person, but same group of people. So I think, why did we do PayPal this month? So we just looked at NVIDIA, we looked at Microsoft, we looked at like some of the other companies last week. And if you're curious, if you got questions on stocks, post a symbol, we can explain that. And then if you're a financial advisor, post a symbol and proceed to rip us a new one. That's totally fine with me. Why?
It is not fine with him.
I have a fragile ego. Brian's actually being truthful for a minute. But,
it will. It will
kill
just
me.
eat at him, and he'll like want to make a post and like comment and come with this whole diatribe about how you're wrong and he's right, and it'll just eat at him until I finally just let it go, man. It's not worth it.
He's so right. I'm so fragile.
Take the criticism and just work with it. Just go.
The reason why I actually appreciate it is because it makes better investment calls.
Mm-hmm.
Maybe they see something that like we don't know. And maybe, hey, Tom, you're an idiot over here. That's fine with me. I would rather, because this is real money. It's a real portfolio. So it's nice for us to get the validation or get the criticism to make better decisions. And everybody here can see that, which is actually good for you. If you're trying to learn how to do this, it's really good for you. So as far as, let's see, what are we looking at today?
Matt says that he's still a cash carrying, check writing Luddite.
Solidarity, man. I'm with you.
He's old. Anybody else out there actually write checks still? Put it in the comments.
You're old.
Chat. Everybody's old.
So here you go. Whether or not a dividend is healthy, you have to look at a few things in this space to make sure that you're doing things the right way. As far as your dividend check is concerned, Dividend Dudes, passive income channel, you want to know how to make money passively. This is one of the first places you should go. The payout ratio, trailing 12 months, that's what TTM means. The payout ratio is what percentage of their earnings do they use to pay for that dividend? Because the moment they pay you, the value of the business drops by exactly that their profit sharing or their dividend check is. So this, for PayPal, crazy low. Are they covered? Well, so what we do is how much cash do they have? That's crazy high. That's not normal, just so you know. Most people are around like 1 to 2 times. So it's either 100% to maybe 300% at a high end. 2,000 is ridiculous. So the coverage ratio is talking about how much money they have on hand to be able to pay that dividend for the last 12 months or the next like cycle. So there's like a future one, but in other words, can they afford it? And yes. So what that means is if this number is really high, the payout ratio is really high, that means that the dividend check that you have probably will not grow much. And there's a good chance that it's going to get cut. If the dividend coverage ratio is also like really low, that also means like the same thing. So
what this usually tells me when I see this is that they have a lot of cash and they pay out very little in their dividend. Like they have a very small dividend.
Yes. And then there's other things that you can do to look at the company to see if they're healthy. First of all, the news. What are they really doing? Like, are they moving their business? Are they struggling? Are they buying companies like they bought Venmo? Who are they working with? What's actually going on with them? The next thing that you can do is you can look at their earnings. Now, earnings per share is basically how much money did they make for every share in existence. Most businesses should be making per year around 4 times what their the share price is. So basically, it's kind of another metric for an employee. I'm not sure if I'm saying this right, but like as an employer, you want to make sure any employee that you have is covered 4 times over before you have another employer. Now, I work in service, so it doesn't work that way for us. For us, it's like 1 to 1. But for most manufacturers, you usually want about 4 times. Why? Because you've got things like depreciation, where like if you have a big plant, the stuff needs to get fixed at the plant, or if you got a large fleet of vehicles, well, they require maintenance and replacement. You have to cover for those things long term. If there's going to be any money left over and to pay the investors, that's why you want to see this above 4. Now, if you look at these guys, this one is PayPal. They are well above that. So every quarter you've got the actual earnings. Look how much they're underestimated. 3 out of 4 quarters, they think that like they're underestimating them, which is good. That's good for a long-term play. So you got 1.4, 1.34, 1.23, 1.34. So basically they're earning more per quarter than the dollar that it says the market says they're worth, the capital says they're worth. So there's more to it than that. If you want, you can go back to our 4-year-old video about what earnings per share actually is. There's non-gross adjusted earnings, and then there's also gross adjusted earnings. So we like to use the gross adjusted one. At least I do. The other ratio I like to see is what their price is relative to earnings, the PE ratio. That's a really good one. Usually the lower the better. If it's 0 or it's a little line, that means they're not profitable. Or the numbers are crazy.
GAAP is
gross adjusted earnings.
Generally accepted accounting principles.
Oh, right. Gross adjusted earnings per share.
Generally accepted accounting principles.
So the non-GAAP versus the GAAP gross adjusted earnings. Come on, Brian. No, it's
LTTstore.com.
Brian's right. So the one of these includes like future liabilities, the other one does not. So one is basically just the flat number. The other one's like, hey, after we do go through all of our business, how much is actually left? So Anyways,
I can't believe I gave a shout out to Linus Tech Tips.
you did. So if we go into now, I'm hoping people picked up on that because those numbers are very important.
Yes.
Very important. Let's look at their total revenue. So we're looking at PayPal. Why would we buy them? Total revenue 2021, $25 billion. That's a lot of money. Today, they're at 33. So there's a consistent, non-violent climb there. And if you look at their total operating income, you can see that's also relatively consistent climb. If you look at their net income, also relatively consistent climb. Those are good things to look at in a business. Same thing if you're going over here and you want to look at their balance sheet. Something else that's good to know is if you go and you look at their total equity, how many shares do they have outstanding? Like how many people are buying in? More is typically worse over a period of time, but look what they've been doing. They went from I guess these numbers are still crazy, 1.168 billion shares outstanding. How many people have it? Now they've bought back, or there's less people that own it, 920 million shares outstanding. So despite those things, their profit is up. And if you look at their total liabilities, they're pretty flat. They've gone up maybe 10%. You look at their total assets, they're also up, not quite 10%, probably like 8%. It's Tom math, deal with it. Could mean a big deal if you're actually doing accounting, but there's generally accepted accounting practices, gross adjusted earnings. But like, those are the things that matter as far as the story that you're like, if you're trying to buy a stock, you're trying to figure out whether or not they're good is... I love this. I'm throwing Brian through like a crazy loop. It's like, I know
But the
he
problem
knows
is, gross adjusted earnings would be GAE. There's an AP at the end. You're
I'm waiting for you to say EBITDA, Tom. It's EBITDA.
EBITDA.
Get it right. But this is so like, back to this. These are the things that you guys should pay attention to when you're looking at whether or not a company is a good investment. We're not talking day trading. We're not talking shorting. We're not talking about the Bollinger Bands or the Fear and Greed Index or any of the volatility stuff. Like this is, I want to buy a company that will make money. And because that company is making money and profiting well, they're treating their people right, hopefully. That they're going to share some of that profit back to us so they can pay back that loan that we gave them for buying their stock. And everything, like every number here, as far as PayPal is concerned, is in the right direction. Even their net change in cash. I mean, they lost some cash, 21. Everybody lost cash that year, especially at the end of the year when they did their reporting. But look what happened.
I'm so glad that 2020 is not in there anymore.
Yeah, it made it really hard to figure out, like,
threw everything off.
It's like the housing market right now.
What we try to do, and to your point of the Bollinger Bands and the RSSI and all the lines and the inverted candle, keep it simple, stupid. That's what we like to play by. Keep it simple.
I'm not stupid most of the time.
And no, it's like if you're trying to do all that, it's like you're stupid. Unless you're really smart and you can do all that, but that's beside the point. Most people don't want to take all the time to be able to read the candles, read all the charts, try and find the patterns, get the edge, and make their 1,000 trades for the day. Keep it simple. Make it easy. This is one way to do that and still make a lot of money.
I would agree with that. I think the other thing that people should think of is if you think that you're going to succeed at that, first go to the IRS, put it into AI, look how many people percentage-wise actually make money trading options and day trading. Just look at the reports. You can't lie on a tax return, and if you do, you're probably in jail. So, like, that would be a really good indication. And from every indication, most people that I know that actually do this are professionals, and they're very good at it, but they're part of the 1% of the people who actually make money doing it. Most people don't. So if you're trying to figure this out and you want to do that, you're probably not going to make money. And you also have to report every single trade that you do at the end of the year.
Yep.
Even in crypto, you still have to do that. So bouncing back to PayPal, look at the cash. All of these numbers look good. There's very little here that looks bad. Now you're going to see their acquisition show up in their cash. pretty like the next report that they do. So that's going to show up at the end of this year. But as far as like every metric, there's a bear case to them. It's a dead company. I get that. That could be a thing. But it's a very, like, given what the finances tell us, I think it's a very small chance. So if you go to like this story, the history, here's your day traders. That's what they do.
That was COVID when everybody was buying, selling, and eBay, all this stuff because they had all the time that they're sitting at home. There's a lot of Amazon, a lot of purchases that went online during that time.
Right.
So there's a case for that.
Right. So you have to be careful when you see this stuff happen. To me, it's not just an anomaly, it's a red flag. It's like, wait a minute. I mean, think about it this way. If you got a mortgage for a house and some guy shows up 3 weeks after you move in, it's like, hey, you want to sell your house to me for twice what you bought it for? Now you just moved in. Does that make sense? Has that ever happened to any? But maybe it happened in like 2021 for a while.
Flip this house.
Like flip this house shows up. Like that's not normal. So
but they generally put a bunch of work into the house, right? They buy it, fix it up, put a bunch of work into it, and then sell it for more. I mean, that's the whole idea of flipping. But yeah,
I'd like to see the quality of that work 5 years later. I know they have to pass code. I get that, but still, it's like maybe my standards are impossibly high. Somehow, I still got married.
They are impossibly high.
So, like, there's a lot of good things narrative going for them. And as far as like the income goes, like if you're saying, well, Tom, your dividend checks aren't huge compared to most people. Yeah. Okay, fine. Here, let's look at that for a second. Yes. $377 is not a ton of money for a $160,000 portfolio. But let's say something happens. Let's say I, again, piss somebody off because I said something again to get me fired somewhere. Again, actually. They were like, what the heck? And, Tom couldn't like talk right. So basically, if you needed this income, this is a stable number. This is a number that I believe will probably grow about 10% per year. So next year, it's about $400. Next year after that, it's about $440 because of the type of businesses and the type of income it's coming from. If I needed to, and we said, well, I need to buy, fine, I'll do JEPQ. Need to buy a JEPQ. That's an ETF.
Your fingers were already automatically writing that.
They were. I have a plan. I'm figuring it out as I go, but no, it's a real plan. No, this is, so if I needed to take the $160,000 and buy something like this, now granted, I'm assuming that like I got fired or something bad happened, like there's a huge medical event or whatever, and I needed to take that. Now, if you do this, please, 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 please do not do it without talking to a financial advisor first, because you do pay taxes. And then also make sure you don't sell your principal. Like keep that in there, because companies that pay very high dividends have a chance and often, especially when it's like 10%, the principal tends to be some of that cut, even on covered call ETFs. So the chance of your actual growth of your overall value is going to go down. So like if I needed to take that, and these guys pay, I think it's around 10%. Got to try to find that. There you go.
12.87. Yeah. Oh, 10%. So, yeah.
Yeah. I would assume like maybe 9. We can humor them and say 10% because the yield and distributions vary, and you can see that here. That's all based on their cover call. So if you look at this stuff, 10%, so $160,000, 10% would be basically $16,000 of income. You divide that by 10 and then take off another 20%. You're getting roughly about $1,200, maybe $1,100 after taxes every single month. So it's more important to make sure that if you don't need the money, to cover yourself for taxes first. And then after you've done that, if you need it, then you could buy something that could actually pay you, because $1,100, that's not bad. That's a good chunk of money.
Yeah. $160,000 at 50 something dollars a share. at 63 cents a share per dividend. That's about $1,700 a month.
We need one of
And
those things that shows the math going on in your head.
And then minus tax. There you go. Use the calculator.
Oh, that's cheating. What are you doing?
And then minus in taxes will get you down to your 1,200. So you're pretty darn good in your head.
I should just do what you do. It's like
use a calculator.
Use a calculator. Maybe that'd make me bad at analyzing stocks. Maybe I shouldn't do that. So, I mean, think about for a minute when you go to the performance and you look at why we do better than most people. First of all, we see it as a loan, but this number is real. If you need if you need that money as a profit tool or as an income tool later on, you can use it. You don't have to like stick to the low paying dividends. Now, the idea and the hope is that I don't piss off customers and I don't say things that get us fired, that we do a good job and that you don't need to use this and that you can then rely on the income of this going up by 10% per year, because that has a different thing that helps you. If you noticed back when I had that JEPQ dividend disbursement, it varied. It was around 10%, but it kept jumping and going down, and you could assume that it's going to be roughly about 10% of your value. But it never increased, at least not consistently. If it did, it would be in tow with like whatever the regular inflation rate would be. So sometimes you need to say things that might get you fired.
He should know.
Yeah, if the relationship's hostile, there's some of that where people abuse good intentions, and I don't like that. But sometimes
things need to be said, you know?
Yeah. Sometimes you need to take it on the chin, though, for the sake of your people and your kids. Even if you're in the right. And I've had to do that more frequently than I would like. Now,
depends on how bad you need that job. Right?
Yeah. Razor, when I worked with you, yes, some things needed to be said. And I hated the fact that, like, when I say this stuff, they get pissed off at me. And then I come back 2 years later and they're like, oh, yeah, we're doing everything he said to do. It's like, WTF? Seriously.
They weren't ready to hear it, Tom.
Why? So I've just become the quiet guy who stews in the corner. Why is he always mad? Because he thinks he's right. About what? We don't really know. He doesn't tell us.
Everything.
Everything. Right about everything. So remember, when you're investing, and if you're trying to do disaster-proof, income-proof, trying to protect your positions, it's not just about the dividend check today. It's about what you could get in the event that something bad does happen. Now, that's also why when you see Intel go up to 500%, you're going to see me sell like $90,000 almost of Intel and take some of that money and move it somewhere else. If we look at what Intel has done since then, and you look at, what do we buy, Nike? Oh, it's just sort of. Come on, I gotta find Nike. Where are you, Nike? There you go. Nike has gone up. Intel has dropped by a lot, like 150% since then. They're still up, but like they were at 520%. Now they're at 350. You can do the math. It's actually 170%. But Nike is now up 2%. So I did better. Deckers is, even though they're flat, which is really weird to me. Maybe I should buy more, but they're like flat. That's a lot better than losing 150%, and they still pay a dividend. We bought Comcast too. Comcast is the weird anomaly where like I jumped the gun, I think. I'm that way with real estate too. I think I so badly want things to be affordable so I can stop remodeling my soul and like finish for once, but it's not there yet. And I don't think it's going to be there till 2030 and slowly incrementally. It incrementally will get more affordable till 2035. Fix me, Brian. Can you do that?
No, instead we're going to assume you're right and just coin that. That's a new word.
Just like
in the English. No, we'll never say Mimi.
Why? It says Mimi. It's not meme. It should be MEEM, not me. Who made up the English language? It's so weird.
Meme. I don't know. The English?
Like the 6-7 stuff. Where'd that come from?
Kids. Stupid kids.
They're all stupid.
Children. All those kids who say 6-7, they're dumb. there's something wrong with them.
Your kids are going to ask you questions now.
They won't get off my lawn.
Your own kids. But Dad,
it's our lawn.
Yeah, so I'm looking at 3M now. And when we bought them, they had this narrative with Solventum and the US government about the masks. There was this huge amount of debt. And what I want to do is I want to just do kind of a health check on them. This is a good sign. We're above 4. Wow. Still really good. It's not EBITDA.
EBITDA.
It's gross
adjusted. That's one thing that I wanted to add when you're talking about when you're looking at a company and seeing the first blush that you like to say as to what their earnings and operating liabilities are, going further into the web and what they're purchasing, what they're doing with the company, all the things that they're trying to move forward. Going into their earning calls are one thing that I like to do when I'm really serious about investing into a company. I pick the last 2 or 3 earning calls, they're usually about an hour and a half long, and listening to them, see exactly what they're doing and what they're saying to their investors.
He also likes to announce himself as Brian from the Dividend Dudes.
I do.
That way they go, who?
99.9% of the time when I do that, the answer is, please make sure that your microphones are muted.
Oh, I almost died and cried and laughed at the same time. You mean nothing to us. Step aside, sir.
The reaction for me is usually, oh.
That's what happens on social media. That's why we're posting. We need validation. Total shares outstanding. So 3M is telling a interesting story. You can see their Solventum spinoff. That $9 billion. There it is. It's getting too high. Sell something. No, that wasn't the whole story. There was taxes.
What else can we unload it on?
So the gross revenue, though, it is recovering. So what I'm doing now is we're looking at like next month's, because we made the purchase, we bought PayPal, the income went up a few dollars. We think it's a good value mismatch, but now we have to look at some of the companies in our portfolio that have done very well to see if they are justified in those increases. There's quite a few of them. So you could stick around and look at numbers with me for hours. No, we're not going to do that, but Brian would love it.
My brain.
I need, why are you still talking? No, this is, so like, here's the big problem. That's when we bought them and now they're up 100%. And then here you go. We're looking at the fallback from that to see where it happens. And I think before we make any decision to sell a stock, you really, like Brian said, you really got to do the investor call, sit in, see what they're planning on, because the problem with selling a stock, especially if you're high income and it's in a taxable portfolio, is you pay taxes. So all those wonderful gains that you get could be just going straight to Uncle Sam or Trump, Uncle Biden.
Well, yeah,
Whoever's
luckily they're not taxing like your capital gains. You haven't realized yet, your unrealized gains.
You know,
if they ever do that, that's the end of us.
Yep. Well, they thought about it.
They did.
California's trying it. They want to. And everybody's moving out.
Yep, all the millionaires. But then there's the moving out tax. They're taxing you if you're moving out.
You see that? They were like, there's the couple articles where they're saying the tax guys came after them a year and a half afterwards. Like, what?
Yeah.
I haven't lived there for 2 years.
Well, you should have paid on your way out. You didn't. So now we can come get you.
That's insanity. That's like, that I don't want to see. What I'd rather talk about instead is, wouldn't it be cool to see at a mall? Remember, like Santa Claus, you go to the mall and you sit on his lap. I would like to see, in 2 different scenarios, Trump as Santa and then Biden as his helper, and then And then the other way, where Biden is Santa, I think this would be much more entertaining. And then Trump is the helper. Because, like, the dynamic would be just so much better. Biden would always be happy. He'd forget who the child was before. And, like, he would just, he'd be such a joy. And then meanwhile, Trump's sitting there is like, I should be in that seat. Do better job than him. Nobody does Santa like I do Santa. My toupee's better. That was hair transplant. I think that would be much better to get us kicked off of social media with, to talk about that. It would. But no, this is I'm not seeing I'm not seeing a lot of bad stories here. This is expected. This is when we bought them. So that was all kind of expected.
Well, you said they couldn't afford it when we bought them.
Yeah, and we said, what was it, like about 4%, 3.5%, 4%? Oh, look at that. Yep. And you can go back and check us. It's all it's there. I don't remember when we bought them. So here, let me give you an idea. If you want to fact check Tom and then criticize me, hang on. I'm going to give you ammunition.
Fact that.
We let's see, transactions. 6 months. Hey, look, dividends. Qualified dividends too. Oh,
$22.
Look at all those dividends. Man, that's good. 2023. It was April of 2023 and January of 2023. So probably what happened is we bought them in January and then they went down.
They did. Look at 115 went down to 106.
Yeah. Hey, how about that? And then we bought some more. Why is that? That's Comcast today. That's what that is.
Then we bought more, didn't we? At 93?
Yeah, we did.
What are they now?
They are, 40? I don't know what they are now. They're high. They're 106% up.
36, where is it? 170.
170. So that was 2 years. 50% gain per year. Every year. That's pretty good.
Yeah.
Most of our stocks are like that, but they take time. This is not like, and this is what I mean by when the Strait of Hormuz thing happens, like it closes, then it opens, and it closes and opens, and you're looking at your stock every day. If you're that person, you probably should not invest because you can't look at the company based on that stuff. You got to look at them for what they do.
And this isn't Roaring Kitty putting calls on GameStop, and then week later, as you know, it gets pushed up, you're making 1,000 times your money, 300 times your money, right? 300%. So you got to be patient with this method and just let it ride.
But think about letting it ride, no stress, compared to somebody who has stress where they have to make a trade.
Yeah.
That's a big difference.
If you're day trading, you have to trade in order to make money. You can't just passively do that.
It's like the movie Soul, where the guy's like, make a trade. Like that's not how this works. And it's incredibly stressful to do that. You're probably going to make a bad emotional decision if that happens, or something happens. You're probably going to get out right away. Don't do that stuff. Don't get involved that way, because then like what you're doing is you're eating your lunch tomorrow to pay for a snack today. So as far as like the monthly average goes, I told a joke, so Brian had to go throw up. He'll be back in a second. And he can hear me. He's got this wireless headset. So this monthly average income...
I just wanted to blow my nose, that's all.
Oh, I was wrong again. Oh no, I suck again.
I figured nobody wanted to see that.
Monthly average, 377. If this number doubles every 5 to 7 years, I'm going to assume 5 because our gains are 20% per year, and that's about every 5 years it'll double. So 5 years from now, that's about $700. And we're going to give ourselves a little bit of downtime. So we're going to assume a 10% drop. So 5 years from now, that's $700 a month. 10 years from now, that's $1,400. 15 years from now, that's $2,800. I'm in my 50s at that point. And if we take it out 20 years from now, that's $5,600 a month. Now, granted, inflation and things are going to take, they're going to take a toll. It's not going to be worth as much per dollar, but that's good money. That's if I do nothing.
Inflation, yeah, but also the snowball effect will help you along as well. Compounding interest.
Compounding interest. All you have to do is just like be somewhat vigilant and make sure that they're selling stuff that people actually need. Don't buy something like, whatever new crypto coin is coming out the next 5 minutes.
Be
Like,
Dory. Just be Dory.
Brian
just
knows.
keep swimming. Just keep swimming. Just keep swimming. Just be Dory.
Just be Dory. And this is why, like, yeah, I know our channel's not exciting, but as far as my own family goes and my children and my company's ability to pay good benefits and treat my customers and my employees well, I have to do this. So whether or not we actually really do make any money on social media, it's unfortunately for me and my sanity, I kind of have to do this to make sure that I'm able to take good care of people, because people, unfortunately, can be somewhat unpredictable. And I don't mean my staff, I mean some of our customers. And it's not like I don't like them. It's just I want to make sure that I can take good care of people, and I need stable sources of income to do that. And later, when I finally have had enough and I want to go live like Chris Farley in a van down by the river eating the government cheese, I want to make sure I can afford that government cheese without doing an EBT card or whatever it's called now. What is it called now?
I think you're missing the point of government cheese, man.
Maybe. It's possible. So what's another one? So like 3M, that's one we should probably look at as a potential. We already know what's going on with Intel. We don't have much left in Intel anyways. We had, that's only 1/5 of what we had in Intel back when they were up 500%. So if we look at Johnson & Johnson, maybe, because that's a big jump too. But see, this is a company that makes like baby soap. They also have pharmaceuticals, but like you're not going to, if you hold on to them, you're not going to do bad. But let's see what we've got. Let's take a look. And again, I want people to throw me stocks. And if you're watching this after the fact, we do check comments sometimes, at least, well, Brian does. I check one where somebody criticizes me and then I spiral and then I crash and cry, hide in a corner, suck my thumb, that kind of thing. And then I come back and try to come up with a retort, and then Brian usually deletes it because it's a bad retort.
It's like you're being mean.
I'm not mean. He was mean first. So social media. Total liabilities. This is about a 10%, 8.5-ish. All right. Total assets up. Actually more than the liabilities, so that's good. Let's look at the story. Ooh, inventory. How much? I'm curious. Did they stock up? I want to check that. Did they stock up on stuff? Let's take a look. Total inventory. They did not. Well, they kind of did. Q1. So since March, they got another almost $400 million of stuff. That's interesting. Trump announced tariffs. They're like, all right, buy all this. This is why we can't get anything. This is why everything's so freaking expensive and delayed. Total revenue. All right, let's see what we got. Annualized. All that looks good. Litigation. What is that, do you think? See that? They got $6 billion back. Did they like win a lawsuit?
They won the lottery.
The lawsuit lottery. Is that
litigation?
Is that really what you? I don't think I'd want to win that lottery. I don't think I'd even want to be in that lottery.
I think that's litigation. $6
billion. There it is.
I don't know, man.
They got money back.
They maybe they got overcharged and they got overruled, so they got their money back from the lawsuit. They had to pay.
Yeah,
they had to pay out $12 billion, but it was only $6 billion. So here's your money back.
You get those notices every so often. So and so company is subjected to a lawsuit that you, as a shareholder, may benefit from.
Oh yeah, all the time. The class actions.
Yeah, I don't want no lawsuit.
I get checks all the time for like $2.71 from a class action lawsuit of something I bought sometime in the last 5 years.
Brian's like, he's checking the mail. Ooh, there's $2. There's $3. There's $2. Nobody wants him to buy them because he's going to get the $2.
That adds up, man.
That's funny. Net income, 30%. More than
bad.
30%.
I think we should also look at Nike and Procter and Gamble.
PG. Okay. We'll go PG. Can't talk about anything political then.
Or we could talk about politics. I don't know.
I'm waiting for your witty return, your witty comment.
On what?
Everything. Net changing cat. Oh, they spent some money. I'm not seeing. So, looking at net income, shares outstanding, and everything going on with them, this is very much a dogs of the Dow kind of stock. Again, 4 quarters in a row. Here's your estimate. Oh, looks good. Here's your estimate. Oh, even better. Here's your estimate. Even better. Here's your estimate. Even better. So this is not a company that
Screw you, analysts. You don't know what you're talking about.
Oh, Morningstar, they don't like them.
Oh.
Why do you think they don't like them? Let's go look at Market Edge wants to buy them. Let's look at Morningstar. What does Morningstar say? I'm clicking it.
Market Edge likes them, but Morningstar doesn't?
Yeah. See?
What's the volatility here, I wonder?
There it goes. All right, hang on. So Market Edge is very technical in their analysis, and the Morningstar is, I'll just show you. They think
overvalued.
They're overvalued. They do. Why? Why do they think that's overvalued? Probably because some of their patents are running out.
Could be.
Yeah, we'll have to take a look at this one. We'll pull up maybe next week.
That's an earning call one, I think.
Yeah, I think we should annoy people in the earnings call.
So, Morningstar says sell them, collect your money, and wait, while Market Edge is saying put your puts in now. Yeah. So when they crash, you get your money.
It is good to know what the big firms think, because they have a lot of professional people that work full time doing this.
Now, here's the thing. We'd like to make fun of them and stuff and call them out, but really they make billions of dollars, right? These professional firms. So they do know what they're doing.
We just try to slide ourselves into the back row and kind of make trades when they weren't expecting it.
Yep.
Kind of like the man in jail who bent over when he dropped the soap.
That was Fletch.
What's your name? The reference.
Bend over. Hello, Ben. Nice to meet you.
Oh boy. Yeah, wonder why. We'll have to look at that. So yeah. Johnson & Johnson's on our list. 3M potentially. It doesn't take too long to look at the earnings calls for both of those. So those two, I can't drop more in Intel. And then if you look at our cost basis for 3M, we don't really have a lot in them. And Johnson & Johnson's pretty low. We've had them. I think we've had these guys quite a long time too. Go look at them. Notice the qualified dividend. That's what you want. Especially if you pay taxes. So they were not too long ago, 2 years ago.
Yep.
And ever since then, they've been paying us back, and we can still get our principal back. That's why you need to make sure they're healthy. The business is healthy. You wanted to look at something PG rated?
We don't have to look at it.
I'm
just saying that for next, because we have a very low cost basis in Procter & Gamble and Nike at the moment. They're both down.
Okay. I actually don't have I don't think I have Procter & Gamble personally. Sold them for something. Probably for some wood. Remodeling wood.
Yeah.
Thanks, Procter & Gamble. Your Gillette razors keep me silky smooth.
It's the best a man can be.
I'm probably not a good poster boy for them. I get emails about the class action lawsuit against Ford for the crappy Fiesta that I had. Matt, would you rather have a Fiesta or a Geo Metro? Now, it can be the convertible. It can be the little 3-cylinder stick shift convertible. You can do that. What would you rather have?
Was this Geo before Ford bought them?
Chevy.
Or after.
Chevy.
Or Chevy. Yeah, yes. Chevy bought. Yeah, you're right.
They bought Suzuki. I don't know. I think they killed them off pretty quickly after Chevy bought them. It's not like the car did more than 50 miles an hour. 0 to 60 sometimes.
It would do 80, but it would shake.
I actually put I had a Geo Metro once. I put Suzuki Swift tires on it. So it comes with these little 12-inch tires, which is kind of funny because my tractor, the front wheels are 12 inches. Like, wait, I had a car like that?
It's a clown car.
It was, but yeah, basically.
You get it and you go zzz, 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 then press the button and it goes.
So I put these 14-inch tires on, and it actually did about 85, 86 before you start kind of getting that little steering wheel wobble. I got it to do it. But man, I got to tell you, that little 3-cylinder, it was pretty reliable. I was surprised at how long the thing would just go. The timing belts sucked on it. I replaced 3 timing belts, but they were only like $13 or something dumb like that. They weren't that expensive. And I remember replacing one on the alongside the highway.
Lawnmower engines last a long time too.
Yeah, it lasted.
That's a slightly above the lawnmower engine.
You just don't want to get into an accident with that car or take long trips with it.
He had 2 Geo Metros back in the day. They were both really dependable for me. The Fiesta was a lemon.
I've heard that. I've heard the Fiestas had problems. I don't know why. Like, what? It's not that heavy of a car. You shouldn't be taxing the 4-cylinder that was in there. I think that was a 1.4 liter, something like that. Their Procter & Gamble's payout ratio and dividend coverage ratio looks a little better. Wasn't it closer to 70%, something like that?
Yeah, it's coming down.
Yeah, okay. Here's your pay raises, 5%, 6%, 4.6%. That's lower than what you'd like to see, but still, it's there. Yes, the gas mileage of those cars was incredible. I could go from Grand Rapids to Detroit and back on my little 8-gallon gas tank and still have enough gas left over for like almost a week afterwards. The thing was ridiculous. Now I drive a Cayenne GTS that's like $100 a tank. You start it up. I was like, oh, there goes $20. It's a cool car, but still, I do miss the fact that I could fill up for like $12. It would just go and go and go. But man, it was not a comfortable car. It didn't have AC. It had like arm strength AC. And I remember the window fell off the track once. And as it did, it started like, I had a guy in the car with me. His name was Bruce. And we were going to some meeting or something. And we're turning left at this light. He goes, "Hey, Tom, it's going to rain. You should probably roll up the window." Oh, yeah. Okay, so I roll it up. It gets caught on the middle of the track, and I was like, oh, it's stuck. And I tried to roll it up, and the moment the light turns green, the window just goes into a bazillion pieces like you would see this tempered glass. Like, it doesn't crack. It just shatters into 1,000 pieces. And right after that, the guy behind me honks, and then the thunder goes off, and it just starts downpouring. Like right in the car. And I'm in this dress clothes. I'm looking at Bruce. He goes, "Tom, I can't wait until you can afford a better car." I said, "This car's reliable. It just needs a little love." And then I almost dropped the clutch when I was taking off. So we're like jerking back and forth. Oh, man. It was, stories. Those are stories. Back in my day.
We had to use our feet to make the cars go, like Fred Flintstone.
You know, my Ford Focus was like that. You could, if you peeled back the carpet, you could stick right through to the floor.
You just open the door and you push with your foot.
Yep, you could. That car was crazy. Like, I put all these motor mounts in it and got the engine running great. And then the whole frame rusted out. It's like, what's the point of all that work? I guess some college kid bought it and he drove it for another 3 years before the frame became unusable. So, yeah, good for him.
The engine fell out.
It's like $800, and maybe they took the engine out and put it in a go-kart or something. Fast go-kart. Brian, this one looks pretty good. We're looking at the total assets. Look at that, 119 to 125. steady increases, nothing dramatic. Total liabilities are barely inching up anywhere. And if you look at the shares outstanding and all the equity they're throwing at this thing,
it's going down.
It's going down. So those are all good numbers. Again, all pretty good.
Expenses are up.
Operating income looks good. This is the problem I have with the dogs of the Dow, or the non-growth value mismatches that we look at. They usually look pretty good. So it's really hard to find, oh, this is a good time to buy them. Net income is going up consistently. I heard a rumor that factory jobs and like the stuff that they can't automate, they're starting to pay pretty good now, conversely to the people who went to school and got an MBA. So the skilled trades and like tool and die and stuff is paying actually pretty decent now. It's really weird to watch that pendulum swing the other way. Especially because one requires a lot of brain power. The other one's just kind of like, hey, do an apprenticeship for a few years and don't do something stupid and you'll be okay.
Right.
Even their net income, yeah. So like cash from operations, that's a little
down
violent.
a little bit.
A little violent. But their share price, the total shares outstanding are also down. So what are they doing with their debt? Let's look at that. So total short-term debt issued, that's a lot.
Yeah, not reducing as much.
That does line up with their liabilities. I guess it would have to. Net change in cash. So building up cash. I want to know what they're going to do with it. They're trying to rebuild their cash.
Brian Island.
Brian Island. Procter and Gamble. They're going to call it Bendover Island. Owned by Procter and Gamble.
God, I hope not.
Sponsored by Pfizer.
There you go.
Oh, man. I think, how much do we have in these guys? What do we got? We got
4,000, almost 5.
Sure beats owning the violent stocks. So we've got 3 to look at. Intel, no. 3M, yes. Johnson & Johnson, yes, we need to look at. And then probably Procter & Gamble. Now, somebody mentioned, I don't know if it was you, Brian, or if it was like Spartacus or something that talked about, and I can't see the YouTube comments, so if somebody's commented on YouTube, I'm sorry.
I could see them.
But we talked about like defense contractors.
I talked about that last stream, because we're running out of missiles. We have to rebuild our missile stockpile.
Matt was saying he can't get the party started with the Fiesta. Yeah, it's like the Chevy Nova. Try to sell that in Spain or Mexico. Means no go. The Chevy no go. What'd you buy? I bought the no go.
It was a fast car back in the day, though.
Yeah, and then it exploded like a Nova. That's why they call it the Nova, because it went 100,000 miles and died.
As the Pacer would explode.
Or the Pinto near the gas tank.
Pinto, yeah.
I think that's something people miss, how far the engineering has actually come. Cars were not as reliable as they are today. Today, you can beat them up for years, and they don't
or is safe
too much. Yeah, that too.
But you could work on them.
Look at these pay raises: 10%, 8%, 8%. This is good. Good for you, General Dynamics. Not necessarily. I know we need defense, but I don't like.
Look at the payout ratio and the coverage.
Wow, that looks really good. Hey, look at that. 32%. It's almost like we knew they were going to be able to afford dividend increases. We got 32% pay raises from these guys.
And now they need to build more. Do they build missiles? I don't know.
They're the Abrams tanks guys, but I also think they're the autonomous vehicles for drones. I don't know if they hold that contract or somebody else does.
Yeah.
So if we're going to look at these guys, that'd be a good thing to check out.
El Camino means the I walk.
The I walk, yes. It's funny too when you go down to those areas, you see those cars all the time. It's like, wait a minute, maybe they think it's a joke. I don't know.
Usually got big old V8s in them too.
Yes, and lift kits. The
Assets are up.
468. 7% asset increase, total liabilities down. Wow.
That's what you want to see. You don't see that very often.
Common stock, total shares outstanding, down, but that's actually a stable number, not a violent one. I think that's good. Are we really? Is it a general dynamics month next month? Is that what we're looking at?
Total revenue's up quite a bit.
Can't imagine why.
Operations up.
So what do we think if we're talking about like operations and what these guys are going to do if all the projections politically happen and Republicans lose the Senate and the House? What do you think will happen to all these defense contracts?
I think they're still going to stick around. Even if the Democrats win, the military industrial complex is just too large. Like the Democrats can't take that out. They're still going to get their contracts.
Not sponsored by Pfizer. Net income.
Hey, Spartacus.
Oh, he is here. Okay.
He finally arrived.
Man, you guys show up like after we're ready to finish.
we've been waiting for you all day, Spartacus. Where you been?
It's like waiting for my wife to try to get ready for a date. It's been 3 hours. No, it's not that bad. But
should we do a contractor showdown? Get all the contractors and military contracts together and figure out who's the best buy.
Brian gets visited by people in black suits claiming that he has too much information on their contracts. Where'd you get that? Google.
That? I was talking to the aliens and they told me.
Yeah, then they're going to show up with different people.
It's the men in black, man.
This is total. Yeah.
Will Smith's going to show up on my doorstep and slap me.
Look at these numbers. This is why their liabilities go down. There is not a single, except for this year, all the paybacks.
It's all red.
All the debt reduction. That's what they talked about they were going to do, and they're doing it. And look at the dividends. So when we talk about, hey, they pay profit sharing, that comes out of their balance sheet, here's your proof right there. There it is. Disappears from their balance sheet. Not that people care, although you should care. Why would you not care? You should care. Because that's your paycheck.
You're on is it a staycation? You still in Portugal, or are you just back from vacation?
I have any idea what you said, Spartacus.
He said, I'm on vacation, and I just happened to arrive now.
This is where you get a knock on your door. Hi. I am Spartacus.
I am here.
Total liability. I kind of like these guys. All right. I'll pick up what they're putting down. Well, unless it's a bomb. Won't do that. That'd be scary.
Don't pick that up. Run away from that.
Anything that makes money, run away from.
Well, the bomb. Yeah.
That's what small business ownership is like.
They set us up the bomb.
I like this. It's been a while since we've even with this. Like, when did we buy them? That was a while ago. Weren't they like number 2 or 3?
Yeah.
They were a long time. It was about time they actually picked up. Where are we going? GD. There we are. 45%. Yeah, that's pretty consistent with their annual returns. Look at their dividends. They are paying. Look at those pay raises. Isn't that nice? This is what I'm talking about, people. You get pay raises. So don't buy the companies that can't afford to give you pay raises.
That we don't have $8,000 into them to get that.
No, we do not. We bought them
2023.
3 years ago.
2? You bought 2, then you bought 2 again in 2024.
Oh, you know what? They're not going to show us because this used to be not Schwab. What was it?
Ameritrade.
Ameritrade. Yeah, we had a Ameritrade account. if you go back and you look at our, so gosh, that's kind of stinks because the performance numbers are actually better than what we are showing you here because they transferred from Ameritrade to Schwab. We wanted them because they had the Thinkorswim platform.
Yeah.
And I was using that, and it was pretty cool to see that, and we wanted to show people that. But then they bought it. So like this is actually underrepresenting us. But
right. Ameritrade had one of the best beginner platforms. That's one of the reasons I picked it for us and they had all the videos and all the stuff that you could go through as well. But then Schwab bought them.
They did. Energizer. They bought E-Trade too, or Morgan Stanley bought E-Trade. And I thought, oh no, it's going to happen to my personal portfolio too. It's going to go away. Energizer, you're holding on, huh?
Hold on.
Yeah, I don't think so. If you're down, how long have you had them, Matt? I mean, because if you're down 50%, that's could be an opportunity, but we have to look at some things first.
See if it's buy more time.
Mm-hmm.
Flat.
Good. That's
still
good.
Paying their dividends.
But there could be a revenue problem, so that's probably why this is all flat. So let's go look at the revenue. Why not? Whoa. Hey, that's good for you, Matt.
Mm-hmm.
They thought they were gonna make half what they did. That's really pessimistic.
Almost exactly. 48%.
Like, I'm gonna make $1. No, you're not. No. No, you're full of it. But I really am. It's right there. The product's there. They're gonna buy it. They said they'd buy it. No, they're not. You're not buying.
I want to be an analyst. Like analysts and weathermen are the only people that could be wrong every single time and keep their jobs.
Yeah, you don't get that in IT. IT, you're wrong once. It's like, well, what have you done for me lately? And we should really look at how expensive you are because you couldn't fix that thing that we never told you about in the first place.
My nephew, who is in IT and graduating, knows more than you.
Which is actually, sadly, probably true now. We're old, Brian. What's Cisco?
Gonna hire them.
What's that do? What's this command line? Isn't that like IBM's from like NASA in the 1960s? Didn't they use that?
Why isn't there a GUI?
What's a GUI?
I want a web interface.
What app? How do I get my app? Install that. Hey, 6-7. I'm sorry, young people.
This is why we don't have young
don't
people.
Become us.
You keep annoying them. Spartacus, I'm in the Algarve. I'm in the Algarve, Algarve. I rented an apartment and have been out and about with a family. Well, good for you, man. You got to get out. Enjoy that time. I appreciate you taking time out to listen to us on your vacation.
Yeah, that's because they like to hear your beautiful voice, Ryan.
I got them back in November, says Matt. Energy stock. Spartacus, what do you think of REXR and Moelis and Company, MC?
Oh,
the MC was
okay.
Master Charge.
Okay, we'll peek at that in a second. So, Matt, here's a couple things I'm seeing on their balance sheet while Brian is complimenting Spartacus for inflicting pain on his family for listening to us about finances while he's on vacation. Good for you, though. That's really good. So assets are down 10%. Their total debt is flat. Their liabilities are down, about like 8%, 6, 7, 8%, something like that. A good thing, though, total shares outstanding went from about 67 to 68. So they're not diluting too much. They did for a few years. There's a big issue with like all these battery companies on board. And I think the pessimistic narrative behind them is, well, is Energizer still relevant? Because all this stuff coming out. I think they are. I think it's just a matter of like when that clicks. I put this into AI a few weeks ago and thought, well, maybe Energizer is that a good one. It was around the time we were looking at General Mills, and it said not yet, but I need to understand like more of what they're doing to position themselves out of the space. And I think people are misunderstanding and misrepresenting what Energizer's customer base is. They are not the same thing as automotive battery technology. They have a completely different customer base. So I think they get the two crossed. And I think in order for me to make a good justification on that personally, I would need to be able to demonstrate this is where the difference is. And I can't do that smart enough right now. Maybe next week or 3 weeks from now. So operating expenses. So if you look at their operating income, they definitely had a cliff. They're coming back. Operating expenses are actually down. So I definitely saw why they dropped. Like if you look here, 22 is a bad year for these guys. But if you look at everything that's happened since then, there's nothing there as far as these numbers are concerned. Maybe the narrative is a little bit different that justify a 55%. I don't know what it was, so like 55% drop. But even here, this is a concern thing. Like cash from operations down, but there could be a reason for that. Maybe they could be retooling or something. So we'd have to. I think in order for me to look at Energizer, which the numbers are fascinating enough for me to want to, I think we're going to have to pull up one of their earnings reports and actually see what's in there. I'll try to prepare that like next week or maybe the following week. We can see like what looks good for them. But like right now, long-term debt issued. There's not a lot of. There's some debt being issued. There's long-term debt that they've got. It's not terrible. It's not great, but it's not terrible either. It's definitely between these guys and PayPal. I still think PayPal is a better short-term, like quick pick. But if we're looking at everything else being equal, not a bad play. But that depends. Wow, they've had a hard time. They really did. Oh, that's right. They reissued too. I hate it when companies do that because you can't see the history behind why they did this. A lot of times, there was a Zim International. They did that to raise capital so they could get these LNG ships, and they didn't tell anybody that. But if you looked at their revenue before they went public, you could see that it was decreasing about 5 to 10% per year. Then they went public, shot up to $4 billion, and then their overall operating revenue stayed exactly on the same exact track that it was before they went public. They actually, in their defense, they had the cojones to publish that. Like you could see it. Now, granted, you have to do this if you're going to go public, but most people didn't look at that. They just said, oh, yeah, it's a $4.6 billion company. It's like, no. You got to look a little deeper than that. But nobody did that. Advertisers came in, they sponsored a couple people, and they posted some positive things. Everybody jumped on board, which is actually why I'm a little bit worried about my projector purchase, but we'll see. I could be wrong. I didn't spend that much on it, so it's all right. What else do we have? Spartacus wanted to look at something. What one was it, Brian?
It was REXR.
Rexford Industrial Realty. Oh, Realty. Okay.
He's into realty. He really wants some sort of realty product.
You like your REITs.
Because
they low.
I mean, they generally hold a pretty big dividend because they have to sell or give 27.5% or whatever of the revenue.
You see that?
104. How do you hold more?
When 100% isn't good enough. Give more. I can't, sir.
I don't understand that. How do you own 104% of the shares? The
last time the valuation for the company was done, the stock price dropped, and that's probably where that came in. So they probably dropped, I don't know. It's got to be.
We own shares 4%. You haven't given out yet.
Could be that.
When you release them, they're ours.
Yeah, it could be they did like convertible shares or preferred shares or something, and we just can't see what that is. Gapping up and gapping down.
Spartacus says I'm retired. I don't know if you know, so I'm on vacation all year round.
I am so jealous.
I am too.
I don't want to retire. I want to still work 20, 30 hours a week, but I don't want to do it under like do your job or you're fired at 90 hours a week. That'd be so nice. That's kind of what we're hoping to do with Dividend Dudes, is try to make this a long-term thing. That way we don't coast off into the sunset and become irrelevant, and I get bored and then try to become a Myers greeter who's secretly dying inside because I'm referencing the person who was the idiocracy guy at Costco, where he's like, I love you, man.
Welcome to Costco. I love you.
I don't know. I don't want to be that guy. Oh, man. This is why I would also be depressed if social media paid us like $1,000 after 10 years of doing this.
Yeah, I think it's going to be better. I think we're going to just, I feel it in my bones. We're just going to take off. It's just going to explode, especially once I get this Kajabi thing done. I'm working on the images, but it's up. It's running.
Brian,
you
20 years from now, I feel it in my bones. No, Brian, that's arthritis.
Anytime, Tom. It's going to happen. I know it.
Hercules,
Energizer. The thing that I want for Energizer, because they make a lot of batteries. They got Rayovac, they got lighting and stuff like that. I want them to see them get into the consumer products as well, like the Greenworks and Eco and all those, that the battery operated things that are taking the place of all the gasoline engine stuff. If they could start producing the lithium ion batteries for them and the solid state type battery, get into like home Powerwall type technology and supply them, that I think that would drive growth for them. Who knows?
You know what I think they should do? I think they should produce a battery that explodes like the Crunch Labs glitter fart machine that they use on people who steal packages. So if the Amazon does actually start delivering and somebody tries to steal that, like it blows up.
It's a glitter bomb.
And then they could retool it for like the military, so that if they take out the drone, the thing still explodes or whatever with glitter. If they do that,
yeah, that'd be fun.
Has absolutely no value, but I think I would do it if I was them.
So
Spartacus, they can't pay for their dividend, just so you know.
I think Matt over on Rumble is trying to recruit you to go over to the dark side and start streaming Rumble. Or actually, what we need to do is get Meld working so we could have a unified chat so everybody can see everybody else's chat.
There you go, talking about unity.
I'm gonna have to
stand.
The next time I'm over, we're doing that.
I need to spend the 5 minutes to actually download Meld.
Planning to do next.
Nope.
Do it.
Alexa, go away.
This is why AI is going to go crazy, Brian.
Okay.
Did she just say okay?
She did. I told her to go away. She said okay.
That's horrible. I think I kind of want to share that thumbnail that when you asked it to make a picture of us and Copilot was like, God is real, and makes this thumbnail. Like, what?
Well, that's just because you threw all that crap in there.
Oh, I'm going to throw in even crazier stuff in here just to like throw it off.
You're muddying the waters of our Dividend Dudes chat.
Yeah, I'm not going to be able to do that in Kajabi. Maybe.
Yeah.
We'll see.
Oh, yeah. I'm fixing all the images. I put a template in there that had like all the stock imaging that I need to replace, but you could get in there. You could sign up for free and see all the crap that I'm doing. And I'm going to be putting all the Dividend Dudes stuff in there that's in our chat that you don't see so that you can see it. Brian goes talk about crossing the streams.
Speaking of that, I got to go to the restroom. But no, this is here's some red flags here for you, Spartacus. You got 161 million shares outstanding 5 years ago. Now you're up to 232. Now, what you would expect is the revenue would increase. We're not on that page yet, but their liabilities have more than doubled. Their total assets. Now, that's a good thing for an RIT because it's like a bank. They're going to be heavy on the assets. Those have doubled too. So what we should see if they're healthy, especially considering the liabilities doubling and the shares outstanding, is we need to see their revenue at least double. And I'm suspecting we won't because the dividends themselves are not well covered. Now, granted, REITs function with their dividends very differently because their tax structure is different. But if we go look at their total revenue, we do see something.
Oh.
It has doubled. So that's a good thing. and their operating expenses has more than doubled. So there's your problem. Total operating income, that has doubled. So that's actually not a bad thing. Probably not going to get an increase on that dividend, though. And they do have net income. So I think what
But they are growing.
Yeah, I think that's what you're seeing is a lot of growth. And I don't think the dividend payout and coverage ratios are expecting. I mean, they're not reporting that. So they're expecting something that's not there. But if we look at their earnings per share, funds from operations doubled. Yeah. Okay.
Yeah.
I'm not seeing. They might have paid a really big dividend too for a while, so they could be measuring it against that. Spartacus, do you know how much their dividend was for you for however long you held them? Because there's not a lot of warning flags here. Not
Cash
yet.
from operations doubled almost.
Yeah,
it did double.
Kajabi, Kajabi. Brian knows more about it than me. I'm just paying for it and secretly crying inside.
Kajabi.
Yeah, here you go. Spartacus, this is where that came in. So they're acquiring businesses, they're acquiring real estate, their liabilities are going up, the numbers don't look quite right, their income is going up, but because their liabilities went up, they think that they're not as profitable. And then I guess if you looked here for their debt, you're going to see that show up here. Yeah, issuance of stock to cover for what they're purchasing. So this is a build, not a... This is actually one of the first times I've not looked at your stock and said, hey, that's horrible. So...
That's rude.
Hey,
the truth. It is the truth.
In my defense, I'm his friend. We're friends. No, so long-term debt reduction.
If we weren't friends, Spartacus, we wouldn't tell you.
Yeah, we wouldn't even look at the stock. I'd be like, who's that? I don't know. So what happens to my job interviews?
But you do go after dividend traps quite a bit.
I do.
Spartacus.
Oh, I thought you meant like attack them.
Oh,
like
you attack them,
like
yeah.
an attack dog. Bull,
A lot of the ones that Spartacus gives us, I'd say probably half are dividend traps.
I think he does that intentionally because he's secretly a billionaire and he knows better.
I think he's testing us.
These guys really know what they're doing.
This is a good one. If they do, well, I'm done.
Oh, there's so many fake people out there, man. You gotta watch it. That's why you can see me mess up in real time. They gave me the short bus for that. This is so I'm not. The problem with a company that's in its growth phase, this is like Amazon. If you look at what they did back when Jeff Bezos, hopefully I'm saying his last name right, used to be Bezos, like Mimi. The problem with Amazon is he kept growing the business, and for 15 years they weren't profitable while he was growing these distribution centers. And the investors are like, we need to see profit. We need to see profit. But like the company was just astronomically growing, but they still demanded the better balance sheet numbers. So I don't think it's fair for me to act like those investors were acting back with Amazon back then and say that this is a terrible buy, because there is obviously clear growth, but there's a lot of leverage too. In fact, that leverage is causing this problem here. So, but look at the estimates and actuals. So if you look at the GAAP, gross adjusted earnings, no, it's generally accepted accounting stuff. Whatever Brian said earlier.
Generally accepted accounting principles.
People.
Principles.
People, because it's bean counters. Those are bean counters.
Principles.
Yep. So here's your accounting earnings per share trailing 12 months. Not a growth stock, probably an income stock, very speculative because of that, but this isn't telling the whole story. If I wish what I could do, and maybe Brian could like look this up, is look at their market capitalization over the past 5 years, knowing that their net revenue has increased by double, and that will tell you like what's actually happening between the investors and what they're doing with this real estate. Industrial stocks, they've been bludgeoned pretty hard along with the commercial sector in the past few years, and they could be on the upward trajectory, but there could also be a lot of vacant tenants from the fallout, and they could just be buying these assets and issuing shares to cover for the fact that maybe people aren't paying their bills and they just have a bunch of stuff on the books. I don't know. I'm speculating. You would have to actually sit on an investor's call and actually see those numbers. I don't think the numbers, though, this time will be as traumatic and apocalyptic as people might expect. This is a pretty high number for an REIT, though, 30 times earnings. People are paying a premium relative to what the company might actually be earning. So that's a sign. Here's your sign. What else we got?
Did you do a Foxworthy? Here's your sign.
Here's
Jeff
your
Foxworthy.
sign.
You might be a redneck.
I'm too redneck for my own neighborhood. I've got a tractor, Brian. All my people drive Teslas and little Priuses. Or like
Jeff Foxworthy reference. That's funny though.
The funny thing about my neighborhood, I rag on boomers, but I have great neighbors and they're all boomers. There's like one couple across from me and one couple over there that are about in their late 40s, early 50s. I think they're in their late 30s, early. They're about our age, but everybody else on the street, going around the corner to the right, going around to the corner to the left, they're all like over the age of 60 and 70. They're all retired people. It's like, So maybe this will be a booming neighborhood in 10 years. I don't know. But this is... this one requires more investigation. Would I buy? I'm not over PayPal. No, because again, that total income thing. Now, if you're retired and you're using the income, that's a little different. I'll admit that is different.
Yes.
But let's see here. They've been around a while. Max.
Hopefully you didn't buy it in 22.
Yeah, like my Cardano purchase.
At 80. Otherwise, you're going to be holding it for a long time.
$2 a share, secretly hoping and quietly praying.
Just sit back and collect those dividends.
Oh, I hate this about I mean, look at that. You went from 2014, where you're making 21 cents a share. Now they cut it to 12.
14.
Property taxes are real, man. And you went 3 years without a pay raise. Gosh, that's like my company.
14. I know that better than you.
I'm sorry, Brian.
It's been 5 damn years.
You got a few pay raises. 16, 16. But that's all based on what we're
18,
doing here. It's not because our customers value
21.
us.
So it's back to 21.
All right, so
24.
what did that take? That took 7.5 years. Wow, okay. 24, 32. That's a good one.
Hike. 24, 32, 38. Hike.
What's all that? Zero? Special
Zero.
dividend? We're going to pay you a special dividend.
Of nothing. This is a placeholder.
Sometimes you see that when there is a spinoff or a divestiture.
Or a website glitch.
They're selling stuff. What are they selling? Better not be like IEP. So you're getting pay raises, but man, they're coming in slow. They're not coming in hot. If you're using this as a retirement portfolio, I don't think it's terrible. I don't think it's a growth stock for sure, but I would pay attention real closely to their adjusted earnings.
Well, it's almost 5%, right? Dividend? Is that what they're paying? 4.82 or something like that?
Yeah, and that's going to be after this negative 30. You got to clear this from the historical earnings. And then after, so 2 quarters from now, so 6 months from now, you should see a little bit more realistic numbers behind the payout and the coverage. But we can't see that because that's trailing 12 months, and that's within those 12 months. You got to get past the 12 months to see the actual number. That's why we didn't like 2020 so much. Dude registered it with his name instead of Dividend Dudes. That's actually Brian's fault. You set it up, man.
I did not. You had to put the account and everything in, so you had to do it.
Yeah, this is my problem is I got 5 billion things going on, so I don't have enough time to actually truly pay attention to.
I'm going to see if I could go in and just change it from your name.
I think you
if
can.
That's possible.
You got to validate the domain too, though. What was the other one that Spartacus wanted us to look at. And by the way, I want Brian to cover this art. No, not that one. No, not that one. This one.
Space Daily.
Yes, because I have to use the restroom. I'm going to send you the link, and then you can read it to people, and they can look at this cool Clint Eastwood style photo the whole time. Except that's not
like
Clint
from
Eastwood.
Gravity.
Is it?
I don't know.
Is it Sandra Bullock? Can't tell.
It kind of looks like it. Go pee.
We got to talk about something weird every stream, at least once.
I will read. Yeah, we do.
It's got to be something weird, because otherwise, I mean, we're just talking about numbers and finance, and that's incredibly boring.
And some people like that, but we got to mix in something weird here and there just to keep it interesting.
I like the dividend checks, don't get me wrong, but like, what are you talking about? The dry eye mathematician commercial guy? Like, is that who likes this?
It can't just be all that.
You know, if we got Jim Carrey on here, or somebody who's incredibly entertaining from Hollywood, somebody who's like a gifted actor, right? I'm not sure they could make this entertaining.
I bet you they could, but not consistently. Like week after week.
I don't know, man. I don't know. Mad Money, Jim Cramer does pretty good. It's because he's got buttons. I think that's what it is. He's got buttons.
It's the buttons.
It's just the buttons.
He's just crazy. He just acts crazy all the time. Once in a while, he says something that's like really sane, and then you're like, "Oh, crap!"
He's still there. Dang it!
Oh,
the Harvard guy
hit
came
me
out
with a fact, and then he goes back to crazy. It's like, there we go. Okay, you worried me there for a minute. Like, you knew what you're doing.
This is why they sponsored him. Okay.
Yeah. All right. So astronauts returning from long stays in orbit say the smell of rain is almost too much to bear, and a familiar street feels like something they're piloting rather than driving. Scott Kelly stepped out of the Soyuz capsule in the Kazakh steppe after 340 days aboard the International Space Station. And within a week, he was telling reporters that the sensory experience of earth, grass, rain, ordinary air was overwhelming. His skin burned where he sat on ordinary furniture. Driving felt wrong, like operating a machine at a slight remove, as if the car were a rover and the road a simulation, instead of simulation being fed through him through the windshield. So this basically is all about space and living in space, and how like you have no gravity pushing on you, so your skin just gets used to that, and just the brush of clothes once in a while. And then when you come back on Earth, like everything is amplified. So it says Kelly is not unusual. He is the pattern. It sounds like AI wrote this. Every astronaut who spends more than a few months in orbit comes back describing the same version of the same disorientation. Rain smells overwhelming. Fabric feels abrasive. Familiar streets feel piloted rather than driven. The Earth, their bodies evolved, has become briefly a foreign planet. Their nervous system is relearning in real time. Let's see here. Let's go back. I missed it. It's time for the porn minute with Brian. Yes, Matt. That it is. And Spartacus CCI stock results came out yesterday. Can you tell me anything now that you couldn't say last week? We'll go through that in a minute, CCI. But I think we also want to go over their last earnings call.
The porn minute with Brian.
It's the porn minute.
Space porn?
Sex in space is different now.
How would you know that?
Because the husband and wife that went up there and had sex, they came and talked about it.
There goes all the viewers right there. They're just gone. So the brain that half remembers Earth. So the reason why, how far did you get in this?
We got down to what the nose forgets in orbit.
Oh, okay. All right. I'm going to post this for people so they can all see. Hey, here you go, everybody. This is a crazy article. It's crazy stuff, man. Yes, we do stocks. Go rewind. It's back there. I've been watching, Brian knows this probably a little too well, a lot of near-death videos, and a lot of people who like supposedly die and come back, or, you know, you can have your opinions of what you want on it. They come back saying it's like 10 times more vivid on everything, smell, taste, touch, sight, all of that, than it is here on Earth. And they feel like they're shoving this huge thing back into their body when they come back to Earth, supposedly. And this is the same experience the astronauts are describing when they come back from space. It's like, wow, that's an interesting parallel.
I mean, it makes a point, like without gravity and that pushing on you and your equilibrium, the fluid in your inner ear, that it doesn't have the gravity pulling down on it, and I guess the lack of the proteins and stuff that you'd get on Earth, like, I get it. Once you come back on Earth after being out there for a year, your body has to relearn the gravity and how to maneuver itself and manipulate the objects within gravity. So
that is exactly how my stock purchases go. I'll buy a stock and gravity
takes over.
and then like 6 months later, this is just enough to inflate my ego again, thinking, oh, I got this, I'm better than everybody else. And then gravity takes over again.
Yeah, unless you sell it, and then it goes the other way.
Yeah. Well, Intel hasn't done that yet. They might do that. Then I'll be sad.
But I was saying the feeling that you say that people get with near death, everything is brighter and vivid and everything is just more, that people on like DMT feel the exact same thing.
Yeah, they have brain activity though.
They do have brain activity, a lot of brain activity, and they talk to the cosmic people too.
The brain that half remembers Earth. The BBC cataloged the neurological changes long-duration crews carry home. The pituitary gland deforms. Cerebral spinal fluid pools around the optic nerve. The ventricles enlarge and gray matter shifts in ways that MRI scans can still detect months after landing. Some of it reverses. Some of it does not fully reverse in the time frame researchers have measured. Okay, so what that means is when Elon Musk says, hey, we're going to Mars, I will have to have terminal something. It's like, YOLO, man.
Now, unlike the moon, that has less, at least Mars has a comparable gravity towards Earth. It's still less, but it's not as less as like the moon or space. So the learning curve, I guess, for your biology is less. I bet pooping is weird after months in orbit. You got to push it out more, I think.
Probably falls out like a brick, man. Can you imagine that? You're like all constipated in space, and all of a sudden it's like the Austin Powers thing, where he just sits there on the toilet for 4 hours. He's still going? What's going on in there?
They just got like a little vacuum tube out there, right? That just sucks it out of you.
Yeah, well, because I mean, like if any of it comes out, it like destroys the environment you're in and you die. It's not exactly a pleasant environment to be in.
What does the space station do? Just shoot it in space?
I think they do. I think they evacuate. Some of it they use in recycling. Like I think with their urine, they recycle it.
Just shoot it towards the sun. It'll eventually get there, right?
Supernova flare from the sun might cause satellites to go out because the International Space Station flung a giant pile of poo at it. Nobody reported that one. I'm not in my good reporter voice, though. I'd have to be a better reporter. Because have you ever noticed this? Like all the female reporters and the guy reporters as well, they all sound exactly the same. Doesn't matter what station you're like tuning into. But think about it, like NBC, MSN, Fox, CNN, they all sound the same. It's like somehow in the interview process, do you have this dramatic tone to your voice that's almost like mysterious, but not quite there, and just makes you like, do you have that tone, and are you attractive?
That's right, Tom. That's because when we go to journalism school, they tell us how to talk and how to do all the things that we need to do. Back to you, Tom. They do. I think journalist school tells them how to talk. You got to have the certain inflection.
Has anybody gone to journalist school and actually like can they validate that? Is that true?
I don't know. We need actual journalists to tell us that. Maybe we could get Brian Sterling on. He could tell us.
You know, they would if you said back to me, I'd be sitting there just like I was a few seconds ago.
They do that sometimes. Do you see the bloopers? They're not ready to be back to.
I was at one of my customer sites and there was a press there 2 weeks ago, and she's like, "So you got a badge on? Do you know anything about?" I'm like, "Nope, nope, don't know anything. I'm just
a janitor, man."
That's actually on my business card, janitor. Jordan, that was funny. This week he was complaining about some of that stuff because they wanted him to clean off some scanners. And I said, "Makes sense now, doesn't it?" He goes, "You mean your title?" He goes, "Yes." It makes sense. And we both cried. It's sad. IT is a sad field sometimes.
Pay me all that money to clean the toilets, I guess I will.
The best newscaster voice is still Carissa Codell. Who is that?
Spartacus wants us to do actual work. He said CCI stock results came out yesterday. Can you tell me anything now that you couldn't say last week?
Come on, Spartacus. We're talking about aliens. Or no, wait. There you go.
It's not aliens.
Well, that's what they feel like when they come back. All right, fine. We'll do some stock analysis.
Well, they've got the observer sensation at the end of the article.
Isn't CCI another RAT, commercial real estate REIT? Yes, they are. What were you going to say, Brian?
Oh, it was after that, the observer sensation layered on top of the sensory recalibration is something crews find harder to name. Many describe a feeling of watching themselves from just outside their own bodies for weeks after return, driving the car, hugging the child, sitting at the dinner table, but doing it all from half step beyond their own eyes.
What is this? Why are you doing that?
This persistent observer sensation, the feeling of watching their own lives from a half step outside of frame, is part of the readaptation experience, Tom. That's kind of crazy.
I think it's funny how many of the astronauts that went around the moon, how many of them are come back religious? Nobody, like, they're the only ones who ever did it. So how do you know? Unless you're physically the person that's been through it, you're not going to have that experience. So here's man. So I don't think Spartacus actually owns all these. I think he's probably looking for ones that are good for him to jump into. Correct me if I'm wrong. I think that's what we're looking for. Payout ratio high, coverage not there. Once again, they just came out with their earnings report though, so that's not going to show up here. That hurts.
Miss.
Big miss, not a little miss. That's more than 50% the other way. We think you're going to make $1 and you come back with 40 cents. That ain't good.
Analysts.
It's all their fault. They're the ones that are too positive. So their last earnings report was 6:30. So okay. Well, that's I'm surprised that's actually showing up here. Normally, that doesn't show up for a month or two. Okay. We can look at them. Let's do a long-term picture first. Let's see what they got. Total assets down a lot. 30%.
Let me see if they have
some
sort of earning.
APA? I have not looked at APA. Total liabilities up. Assets are down by a lot. Not good for an REIT. Now, that's expected. Commercial real estate's been really hurting, and it's not improving that much. A little bit, not that much. Especially the people that were on adjustable loans when the rates were super low. Now they're feeling some pain, and I think that's going to continue. So total liabilities, total equity, that's a good sign. So that's a little bit better than the one that we just looked at for you. Okay. Income statement. Oh, they don't have any income. They know I'm talking about them. Don't tell me anything. Here we go. Income statement. Let's try this again.
Refresh.
All right, we got it. Okay. Not a good sign. 2 restated ones 2 years ago. Total revenue is cut in half. Operating expenses also cut in half. Okay, a little bit more than half.
Spartacus says, I have all the ones I mentioned here in my portfolio.
Oh, okay. Dost thou have a financial advisor, Eth? Verily, I say. That's I would check
Verily I say unto thee.
Verily, I say unto thee, get thy own financial advisor. Net income is not. There's something going on with these guys that's not good.
Well, they're down 4.9%.
This is different. The other one wasn't terrible. This one, that worries me. What did they write off? What happened? Cash from investing. See, all this stuff here, like even the financing. Look at this number.
Here, Tom.
Long-term debt net, long-term debt issuance. Like they're starting to pay some of it off, but then they got the short-term debt too. So
Go there.
Go where? Where am I going?
Dividend Dudes chat.
Dividend Dudes chat. I don't see no chat. Oh, like Teams
Dividend
chat.
Teams. Duh.
All right. Investor, Crown Castle, and news releases. Oh, you want us to do actual earning report stuff. All right, let's look at them. News
This
releases.
is what he's talking about. They
Do we
sold the
accept-
fiber.
Do we accept the cookies?
No. Don't ever accept
There's
it.
no other option.
There isn't, is
They
there?
don't give you anything else.
I accept.
No, I don't accept that.
That's funny. They don't accept it.
They don't accept not tracking you. That's
Just
funny.
keep the bar up.
Q2 2025, Q2 2026. Site rental revenues are down by quite a bit. I don't know, man. Commercial real estate, I would be. I mean, they're still making money, but look at these numbers.
Yeah.
The people working there, the leadership there, they're stressed out. I would.
Yeah,
be.
these are the fiber and the cell people. Remember?
Fiber in the cell people.
No, fiber and the cellular towers.
Oh,
people.
yeah. We looked at them like 3 weeks ago. Those guys.
Yeah.
Please give me fiber and internet, because then our streams will magically attract a lot of people.
They concluded the sale of their fiber and small cellular businesses. Continue to focus on becoming the best-in-class U.S. tower operator by driving operating efficiencies, increasing land ownership under our towers, modernizing our system, and improving customer experience.
But why would you sell fiber?
With a clear, pure play U.S. tower strategy, a disciplined capital allocation framework, and an investment grade balance sheet, we believe we are well positioned to deliver attractive long-term shareholder returns. That sounds like somebody wrote that for them.
Who's the politician that does that? The thing that you're
What?
doing? Yeah, who is that? Who's it?
All of them do.
All of them do.
Yeah, Obama does it. And
Trump doesn't do that. He does the accordion thing.
Trump's the only one that doesn't. Trump's not the politician.
That's why they hate him.
Like Clinton does it.
Conference call details. Spartacus, my man.
I guess the question is, now that they sold off their fiber and small cell businesses, does that actually position them for a better future as far as revenue and stock price?
The Clinton thumb. Apparently that's called the Clinton thumb.
I don't think-
remember that. I did not have relationships with Monica Lewinsky.
Hillary
I
does it
cried
more.
when I saw that.
But I don't know who started that. I don't know if it was like Bill Clinton who started that. Somebody did. I don't remember like Bush doing that. I don't know.
Hillary will take credit for it because of all the stress she went through because of him.
It's probably a Hillary Clinton thing.
He probably like admits it's his fault partially.
I drove her to it.
Good to him. Good for him. You know, but even though this is all theoretical and they never actually said any of that, but you know, hey, Spartacus, for this one, here's the problem. Anytime a company decides to lay people off and they say we're going to be more efficient, yes, payroll is the biggest drag on capital. Like it's on my company by far. It's like it's the only drag. It's payroll, and it's a big drag. You can't easily do more with less. So the problem with fiber selling that is fiber is the current, like that's what AT&T is building.
Everybody's going to fiber.
Everybody's going to fiber. So why would you sell one of the, like, there's another reason why they're selling something like I get it. They're trying to focus their business or something like that. But you know, why, why would you sell something that is on the up and coming unless there's a financial struggle behind the scenes that's not being justified? Now, if you go back and you look at we gotta go back to it. Where is it? Balance sheet. Come on, balance sheet. Show me the thing. If you look at the shares outstanding, they've maintained those shares pretty consistently. So I think that with the lack of dilution, that's pretty good. But this report's not going to show us. I mean, they can talk about it, but you're going to have to dig a little bit deeper to find out why they actually sold it and what the reason is, that like how they believe that with less, how they're going to produce more other than propping up the stock itself. These kinds of things are exactly why when I say the dividend check needs to come from the proceeds of profit, not from the sale of equity. So if I was these guys, and again, REITs are a little bit different, but if I was these guys, I would not want to see this. So here's your warning sign, Spartacus. If the dividend check here jumps up because of the sale of fiber, to me, that's a bad thing. If it stays low and they start, like, whatever the problem is with these guys, they start fixing that and they start doing the cash flow is king and they start like adjusting, or maybe like the depreciated assets they have for all those cell phone towers to start modernizing their equipment, I would say that's good. But it's gonna take time to see that unfold. That's not gonna happen tomorrow. I was also gonna
say, in their defense, cell towers are not going away. Cellular is just gonna get more and more with all the cell phones and 5G, 6G, 7G. Now they're coming to a point where they're putting smaller cellular into cities instead of giant towers.
It's killing all the pigeons.
But there's that. Hopefully they're getting into that a little somewhat. But yeah, cell phone towers, the land under them, none of that is going away anytime soon. So there's that. It's not like a dying business.
Now, in defense of the contrarian play, if you're looking at buying an opportunity, if you understood the argument of what they're doing and why, if you go back to the stock price historically, I mean, these guys have been around a long time, and I don't think they're going to go anywhere anytime soon. Like Anelli Capital's got this dilution problem, but they've been around for a long time. They're not going anywhere either. You're going back to 2013 prices with this company. So there could be a genuine upside to that, but I'm not sure I would justify the dividend check based on the earnings that I see so far. I think that if I was running this business, I would probably, now here's the problem when you do this is the moment you cut your dividend, I mean, gosh, look what AT&T, look what happened to them. We're going to cut our dividend. They got destroyed.
Right.
Poor Brett. And he had to, but.
To defend the defensive play defense, that I think this long term will be good for them.
Yes. Yep.
Short term, there's a good chance that they're going to get brutalized, but that might mean a good time to buy, right? But I need more. I need new earnings call since all of this took place,
Yeah,
not just a quarterly report.
You're like Moses. Show me your glory.
I'm very much a show me kind of guy. Show me the money.
So here's AT&T. They went from, I don't know, what was it about 2022? We did a video on them with Brett. 39 cents a share. He cut it. He's the guy who did it. And it was 28 cents a share. And they still fell pretty far. Like they went from mid-20s, somewhere around there when they said they're going to cut it, all the way down to like $14 a share.
It's because they hate their investors. That's what he said. Go back and watch it.
Yeah, there's a good video that we did with him, and he explained what their plan was. And that's for CCI. The reason why I'm bringing up AT&T, you want to know what that plan is. You need to know, like, okay, this is what we plan on doing with it. And if the answer makes sense, and it's not like this covered thing where like, oh, you know, we had some modernization we had to do, and we had to pay for it somehow. We didn't have the money. Like, get through that. AT&T was pretty straightforward. They said, hey, we have some liabilities we built up over a long period of time. We need to pay those off. And I was fine with it. I held on to their stock. I still have their stock personally. Dividend Dudes does not, but that's because I don't want to dilute like and become an index fund. And we wanted to profit take a little bit. Sorry, AT&T. Thank you, by the way. So like the CCI stock, I don't like... I mean, this is a good story for maybe a value mismatch, but I don't like some of the other numbers I'm seeing. One thing I do like seeing is the longevity of the company. I do like seeing the shares held by institutional investors. They call that the smart money. That means that the business itself is not going anywhere, and the dividends and the overall operating model is probably not going anywhere. And Brian already said this. He said cell phone towers aren't going anywhere. So I agree with him. I don't think they're going anywhere. I mean, the medical industry needs ways to treat cancer. So, hey.
Short interest isn't super high.
Yeah. Oh, the volume, stock volume. Yeah. Wow, they're heavily traded. There's a lot of trades. So think about this. If you buy one stock, you're one of those. You're talking 10,000, 20,000 a day. That's a lot of. Here, let's zoom in. Let's zoom in a bit. Let's see what it's like daily. Oh, that's a huge number.
Look at that one.
That's crazy. Yeah, and then look what happened. The volume was up. Boom, stop.
Yeah.
Income stock. I'm not sure yet. This isn't like the other one.
Well, that was probably the report that came out, and then people purchased after they sold the other part of the company.
Yeah, I don't want to see them use that sale to pay a dividend check. If I was owning the stock, that's what I would not want to see. I would want to see them fix whatever ship they're trying to right, because then long term, 5-6 years out, you're looking at a very healthy company with a very healthy growth rate. And again, going back to our portfolio, that's exactly what this is. So in fact, if you wanted to go back a little bit and then like expand upon how is this going to look in 10 years, if we needed the income, I would still take a lot of these stocks and you would see me start positioning things for dividend income with the stuff that we're getting and still keep about half of it in the overall growth phase. So I'm not going to look at all into JEPQ for $1,200 a month. I probably get somewhere around $700 or $800 a month with this portfolio and take the rest of it into that value mismatch strategy. So I still have some way to grow, even if I don't have like money or whatever else is to put into that, because in that way, you know that you still have some growth. Because a lot of times these RAATs are great, but they pay you the dividend at the cost of your principal. They're just paying your principal back. So you got to watch that. And that's where it's very misleading. You think, oh, well, PayPal doesn't pay. Like here, I'll sort it by dividend yield. You think PayPal and some of these ones here don't pay that much. But again, General Dynamics, let's look at them. We just looked at them. We want to potentially buy them more. Look at the dividend pay increases they have. Come on. You can do it. 1.6 per 7. Here, 3-year growth rate, 33% almost. So every year you've gotten a 10% pay raise. If I was making $1,000 a month, now that does require more money to do that, but if I was making $1,000 a month, I am now making $1,300 a month 3 years later on the same stock.
And to put that in perspective, they went from $2.97 all the way up to $5.25 or something like that.
Yeah, and then here's the other point. That's just like Brian was saying. 3 years since that very same dividend check increase, the stock has also gone up. In fact, thank you, Brian. That's exactly where I was going. Has gone up by almost 80%. So not only is if you had $100,000 in there, your $100,000 went from $100,000 to $180,000. Your dividend check has gone up by 30% too. They have been amazing to you. So be very careful with like how that works. Now, there's another thing too. As a retired person, maybe this doesn't matter to you. It depends upon your income, but taxes, there's a huge difference. This is why I talk about the financial advisor thing so much between a qualified dividend paying capital gains rates in the United States versus a ordinary income tax. Now, if you're over $100,000 of ordinary income, this matters a lot, especially if you're over $200,000. If you're not making any money at all, it doesn't matter. I mean, dividend, $10,000 dividend checks doesn't really tax that much, but especially if that's your only income. But like that scales very quickly. So there's more to the picture than, hey, this company pays me a 10% dividend check, I should buy them, because normally, like, here's another good story. This is why we sold them. I held on to them to tell the story. You can even look back when we bought them years ago. I said, watch what happens to their dividend. That's not going to go anywhere. And I did it to show the example for an audience that didn't exist at the time, which hopefully you guys, I can tolerate me back then. I don't know. But like these guys for their dividends, it's not the same story. $1.20, $2.28, $1.36. Look how violent these are. $2.40. The general trend is downward. And also the stock price, even if you pull up like the lowest part where they're at right here, it's still above where they are today, above where they are today. So even if you took their lowest point back in 1998, that's a long time. I was in high school. So all the way back then, you have less money today than you did then. Now, granted, they have paid you a dividend the whole time, and it's a good dividend. It's a 10% dividend. So that's okay. But that dividend itself has been decreasing too. They call that net asset valuation or gap. What do you call it? Gross adjusted earnings. No, they call it like net asset valuation. Like your net asset value depreciates, like it goes down. So you don't want that. You don't want that with your investment, because then if you do have to sell it, you get less money back. Like, what's the point of that?
Correct. And Spartacus says, as long as the price remains stable and it keeps paying the dividend, ...
I'm not sure they will. Their income's not there. Now, because they're an REIT, they have to pay a dividend. They make some money, they got to pay that. So the dividend will probably go anywhere. If you don't plan on selling them, might be fine.
Might be. Yeah. Just hang on to them.
Here's the problem with the Nally Capital. They did reverse stock splits. If you had 1-4, dilution. Not good. So, all right, here we go back to the dividends. Let's look at them. This is another one. This is what I'm talking about. They finally started doing better and recovering from the huge issues with mortgage-backed securities they were running into. I like Anali Capital. I like what they tell about the economy. I don't like the dilution. So here is the pay raises. So if you're getting $1,000 a month, you are now getting 13% less, then 13% less of that, then 3% less of that. And then here's like a 20% cut. Think about that. What if you needed that money for like life? That ain't good.
Nope. And then you can't sell it because the stock price is down. So if you sold it, you're realizing those losses as well.
Brian calls that the people holding the bag. The bag holders. Yeah. They are stuck. In the REIT's defense, that's an incredibly good way to make sure that you keep your investors. They ain't going anywhere. So I don't know. I personally, I'm young enough where I can steer away from those things, I think, and be just fine. If you're old enough and you need that, it's a little bit different story. But I do think that there are better plays out there. Like a good one, they talk about it on YouTube a lot. SCHT is a pretty good dividend growth stock. And the covered calls from not JEPQ, but JEPI are okay. VTI, VOO. Some of those are okay because they have diversified industrial-based stocks. Things like JEPQ, they're very tech sector heavy. And I think with the astronomical valuation of NVIDIA, which is still surreal for me to see it. It's like, I cannot believe, I mean, good for them, but holy crap. That's like the bachelor meets a billionaire and she's thinking, you're the only one for me. And the only thing the guy ever did was work at UPS his whole life in the factory. Like, what do you see in this guy?
I don't think there's that much money in the world. Like if they sold everything to get that 5 trillion, I don't think there's $5 trillion of actual cash.
Let's AI this. Let's do that. Let's do it. If NVIDIA to 0, what would happen? What do we want to say? The economy, or do we want to? Because this is the free version of AI. We've got a paid for version elsewhere. Like, what would happen to the stock market? We'll just do stock market. Let's do it. What do you think? What do you think it's going to say?
No, crash. Massive collapse.
This is why you don't short NVIDIA. If NVIDIA stock went to 0, it would trigger a massive historic collapse across the global financial system, wipe out trillions of dollars in wealth, and likely cause a severe stock market circuit breaker event.
This is almost too big to fail at this point.
Yeah.
Right? Like if it did, I think there are billionaires or companies that would get together and put money into it just so it doesn't collapse.
Almost like what happened with Intel.
Almost.
Supply chains matter, people.
That it does.
You don't want, like, the people complain about oil. It's like, yeah, I get it. But if oil stops shipping to LA or New York for a month, what happens to all the people there? The hospitals, you need to keep that going.
Yeah. Now, here's a question. If NVIDIA were to collect its market cap in cash, is there enough cash in the world to provide for that?
I'm typing this. If NVIDIA were to collect its market cap in cash, is there enough cash?
Physical cash, physical currency.
Because there's people that don't have dollars that bought it, so physical currency to pay them.
Supply.
That's actually a good question, because most banks, when
No.
you think, most banks, when you go to the banks, like, oh, give me all my money. They don't have it. They gave it out to some other buddy who wants to build a house, or a company who wants to finance like their operations, or a guy who wants to buy a motorcycle. It's a Wonderful Life movie actually talks about that. He's like, they're all sitting there waving, trying to get their money back. And he's like, I don't have it. It's in your house. It's in your, like, that's how the financial system works. So everybody thinks like Elon Musk is sitting on trillions of dollars. He's not. That's what his company's worth. It's probably why he lives in a shipping container.
$2.63 trillion short. If you collected every physical dollar, bill, and coin on Earth, he'd still be $2.63 trillion short. Yeah, you have a little bit less than half.
Every physical so like they're going into people's couches and
So 2.47 trillion is how much physical.
Let's include the whole planet.
Like all denominations.
Economies. That's an interesting question.
Spartacus says, it's a hassle. Did you know there's no way to buy SCHD here? My broker doesn't offer it. There are some similar ones, but they don't pay as much in dividends.
Yeah. You're better off buying individuals with your financial guy.
No, you're better off moving to the United States.
I saw on that same note, there was the Little Red Balls, I think is the name of the video. Have you ever seen this where it talks about immigration in the United States, what it does to the other countries? Like all the brains, all the money, all
Yeah.
the talent, all the education gets drained out of these countries coming to the United States. So we get all the smart people that create the economic wealth, and then the people that are left behind, the ones that may be intelligent, may have like high IQs and the ability to get out, can't because the system they're in keeps them down. And I think maybe I can find it, but that's
Well,
yeah,
you saw the
look at this.
Castro.
Look at that.
We swallow roughly 50 of the. Oh man!
Can you imagine
Almost.
that? 60% of the money is just gone.
Was that 3/5? 3/5 of the world's physical money would be gone.
A little bit, yeah. One stock.
Oh man!
So when they say like the money, this Mark
Instant.
Zuckerberg lost this money today, that's just the value of the company dropping from people putting puts or selling the shares. So asking AI about NVIDIA is like asking Mayor.
Mayor McCheese from
About
Ronald
beef.
McDonald
Oh yeah, okay.
about beef. They're both not going to have an impartial opinion.
It's still fun to talk about though. It's like going to Fox News and expecting a Democratic left-leaning report, or the same thing with CNN. They're unbiased, or NPR. No, they're not.
All right, Spartacus says, but I believe that when this reverses and NVIDIA drops below 80%, and I do believe it will, because I've seen impossible things happen.
Boy, that would be a 2008 event. Because I think back to 18.
I think it'd be worse than a 2008 event.
Yeah, that's a big chunk
Honestly.
of the market. So like if we did that thought experiment, they were, which was a good one? Maybe DuPont. I don't think it was Fastenal. Wasn't one that got hit that way. I think DuPont reissued, so we're probably not going to be able to see it. Yeah. Oh, I can't see it with them. Would be another good one that would have been back then that would show it. Because there was a couple companies back then that just got destroyed. Like you lost 80% of your market. Like most, Citibank. Come on, Citigroup. I think JP Morgan Chase lost a ton too. Yeah, here you go. Here's your asset bubble. All right, so think about the fallout from 2008 and the bank that provides you financing for your mortgage. And people start waving their things and they start calling for that money. This is the scenario we're predicting with NVIDIA. That would trigger something like this across the whole market. Even our dividends would be probably cut a little bit. Like if a company loses, you take 80% of the money out of a company, even Fastenal, you take that out of the bank account, what are they going to do? Like if you took 80% of the money out of my bank account, how am I going to run payroll? How do you
Also,
do
look
that?
at General Electric.
Oh, yeah, because they went
Remember-
bankrupt. Yeah.
That was another one.
Yep. We actually hired somebody for a while that worked there. So they went from over $500, $550 a share almost, all the way down to 18.
That's a crash.
That's a holy crap. That's not
In
good.
2 years.
And then they did a reverse split after that. So you even got bludgeoned again. They're recovering, but like, I don't think people understand NVIDIA crashing 80%, how astronomically bad that would be for everybody. You don't want to see that. What you'd rather see is them to just keep going and keep doing well, because there's a macroeconomic effect that takes place and affects everything else. There's like a chain of events that occur, and that's not a good one. So you said GE. Is it still GE?
Yeah. General
GE
Electric.
That's the aerospace one. They got a couple different divisions. They split off since then. I'm not sure if we're going to see it, but let's
Maybe
take
not.
a look. Yeah, you can kind of see it. 2007, they were almost $200 a share,
Yeah, back in the 90s, they were one of the largest companies.
down to 30, 15%. You have a $10,000 portfolio that's now worth $1,500.
They're like way up now.
Yeah, I bought them and I sold them and paid for some remodeling things. It was 2024 that I did it. Like late 24, it was right around here. I didn't think they'd keep going up, but they did. Oh well. This is why. Okay, so like, I don't want Nvidia to crash. That's why I don't. But this is also why. Back to I'm going to look at Campbell Soup, our worst performing stock. When you look at their dividend check, you need to make sure that they can afford to pay it based on revenue. People buying their products, and sure, poor people, according to the CEO or CTO or whatever that was fired.
VP of Information Technology.
Yeah, that guy says that only poor people, but that's the company that you want to own in a crash, the company that caters to the common goods, the things that people need to have. Because if you don't do that and you've got an 80% crash, you're struggling. I don't care how wealthy you are. If you have a $10 million net worth and you lose 85%, you're $150,000 net worth. Like you, at best, that's your dividend check. $100,000. You're not doing well. That's 1.5 million actually, but still that's a big hit. No, so payout ratio is 76%. And then if we look at, let's go to their operating income. So this stock's been beat up pretty bad. They still would be beat up. But what I want to do is I want to draw a parallel to the two that we just looked at that crashed heavily, Citibank and GE. And I want to draw a parallel to something like this or Fastenal during the recession. So let's, since we're in here, let's go look at this. Net income, that's the number. It's down, but the stock is down by almost exactly the number of their net income. That should line up. That makes sense to me. So, okay, fine.
40%.
Yep, 40%. So now we have to see that they can recover. Now there's quarterly statements we can look at too, and we can look at cash flow from all of them trying to recover and the debt that they're issuing. But that's not the story I'm trying to tell here. The story I'm trying to tell is we want to go back to 2008. I think we're going to see it with Fastenal. I don't think we're going to see it with these guys.
It's story time with Tom.
Story time. Look how small the drop was.
Get your carpet squares and carton of milk, children.
Story time. Hey, story time with Tom. So this is $39 a share or something like that at the high absolute peak. And it went down to, during the depths of the recession, you're at about $26 a share. You lost some money on paper, but look at the dividend checks. 20, 22, 25, 28. You're still getting pay raises. Still. And you recovered. It didn't take that long. It took a couple of years and you're back to where you were. Now they're still struggling now, but that's why we own them. We believe in goldfish. But this is this is something people don't see in our portfolios. Like, how did you get 20% per year? Well, we're buying it based on a different set of parameters and goals than most people do. We're planning for this. Don't want to be Citibank. I don't want to see that event. I don't want to see NVIDIA crash, but I do want to make sure that I still get paid if something happens. And this is where we come in. I've lived through two of these things, the dot-com bust and the housing recession.
2008, yeah.
So about every 10, 15 years, something happens and we are overdue. And there are a lot of economic headwinds right now that are pointing towards this is going to happen. I agree. But when and how, I don't know. Maybe it's the oil thing. Maybe it's the real estate thing. Maybe it's the AI taking over the jobs. AI has provided a lot of wealth for a lot of investors. But do you know specifically what it could be? Because the dot-com bust happened with World Trade Center. So, the housing bubble happened kind of the same way Sears did.
Or Lehman Brothers.
We're doing fine. Yeah, the Lehman Brothers. Like that's.
I also saw the 1987 crash.
It's every, you just follow that out. It's about every 10, 15 years. We're overdue. Why? Because the Fed kind of kicks the can down the road. Administration's doing that too. Nobody wants to take ownership for the financial problems they create. So if you go back to our portfolio, let me pull up one more for you, and then I think we'll call it a day for today. But we got Fastenal here. Fastenal, let's go back to the recession, because we talked about that huge dip from NVIDIA. Okay, I got to zoom in on this because it doesn't look like there was much of a dip at all. They sell nuts and bolts. Okay, 3 cents, 3 cents, 3 cents, 5 cents. Your dividend almost doubled through the recession. Does that matter? I think it does. Let me zoom in. Come on, zoom in. Zoom in. There you go. So here's 2007. The market takes a big dump, and this is it right here. Some $6.71 a share down to, for like one day, $3. So they got cut in half. But the dividend didn't go anywhere. If you looked at Citigroup and GE, the dividend just gone.
Yeah.
It's like Transocean and BP. Go ahead, Brian.
Well, I was just going to say that they absorbed the dividend because they couldn't pay it anymore. Whereas these guys, I mean, they dipped 45%, but it's not like they were expending a lot of cash on their dividend.
So here's another good example. This is 3M. I think now, if you want to own speculative investments and do that, that's fine. Just make sure you've got a floor in mind. What happens if 2008 happens again? What happens if, NVIDIA really does do that? I hope they don't. But
we always say that. Get your foundational stocks first, and then you could use the dividends from those to get the speculatives. And
right. Here we go.
And use those plays.
40 cents per share, 40 cents, 42. Now, here's the fun thing. When the market's crashing, they don't show this in the chart, but I owned AT&T during the recession, and we had like $200 that we were getting. They declared their X date for their dividends, and we got paid normally. I think it was like $200. But a bunch of people decided to sell their stocks, and our dividend check like quintupled. For 3 quarters. We got huge checks. Like, what is all this from?
Why'd you sell before the
It's
dividend?
from all the people bailing. So not every company does that, but they did. So thank you, AT&T. But here's the 40 cents a share down the recession. So the highest they had, we're going about $80 a share all the way down to 35. So they still got cut in half. Way better than Citigroup, way better than GE, way better than the automotive stocks and all that. But still, don't pay attention to that. This is the opportunity. This is the risk way up here. Mm-hmm. This is the opportunity. But here, 42 cents a share, 42 cents, 43. Nothing changed. You got pay raises.
And it didn't last that long. Like that dip was maybe a 2-year span.
Yeah,
if you just waited it out, you were just fine.
This is where Dividend Dudes is right here. We look at this when this is where we're like, oh, that might be a good buy. And again, it's coming from companies that produce products that people have to have. And if the market crashes, this is why we do not stress out. Do I really think that you are not going to need roofing materials, toilet paper, shampoo? Look at what's in our portfolio. Do you really think that any of these companies actually are going anywhere despite evil corporations and all of the things that happen within boards and investors and CEOs and all that? They're not. You need nuts and bolts.
Yep.
You need
and why in the Intelligent Investor, going back to that book, it's all through the pages of that thing. Mm-hmm. Time in the market always trumps timing the market. Mm-hmm. This is an exact example of that.
ADP, you need payroll.
Wait it out, yeah.
You need energy. You need shavers, like shaving cream and shavers and soaps and stuff. You need, believe it or not, the Weather Channel. You need to, even if they're wrong, you still need it.
General Dynamic, you need war machines.
And if you don't have chocolate, all the women of the world will revolt, and probably some of the guys too. I'd be one of them. But think about what's in these portfolios, like mining. This is stuff people have to have. You don't necessarily need to have a real estate tenant. You need real estate, but who controls that is the different story. That's where another thing I don't think people get how we do better than most is the defensive moat matters. What they make matters. The logistics and supply chain matters. how they go about their business and who their customers are and how well defined and defensive those customers are. Like AT&T stock, for example, they're not going anywhere. What would happen if they did?
I would say 3/4 of our portfolio are foundational stocks that provide the concrete for the rest of them.
Yep. Then you can day trade and do the rest of the stuff with this. Like Rumble is our Hail Mary because we think that YouTube hates us secretly, and they probably don't. We probably just suck, and they just are not. They're just not telling us.
Yeah.
But like that's all of these companies. This is textiles. We went was it like a year before we figured out we're going to buy textile stocks.
Oh, what? 3 years?
Mm-hmm.
I mean, we were looking, but we couldn't find anything for years.
And we're still wrong. Look at that, 1.7.
Then we found Decker and Nike. Well, Nike's doing okay, right?
Mm-hmm. These guys are a water company. This is stuff. When you're investing in businesses, you need to make sure that their product that they have, like I said, that they're paying you from a product that people have to have, and that they have a good defensive moat around that product. Mm-hmm. Despite people ragging on some of these like companies, it's the truth. I mean, if you've got enough built here, like you'll probably start seeing me get a little bit more speculative once dividends get over a couple grand in this portfolio. But until then, I don't think it's a good idea to buy something that like doesn't necessarily pay you based on their earnings. They're paying you from equity or some sale or something. So that's why I would say with CCI, be careful with that. Watch what they do. It's a loan. Tom, it's not a loan. I know that. I know it's not a loan.
Not exactly.
But to me, it's a loan. I want my money back.
Well, to you, to Warren Buffett, to Charlie Munger, to Benjamin Graham, it's a loan.
Yeah. And I want them to do well too. I don't want them to like do bad because I want to hold on to them. I don't want to pay this capital gains on selling a stock.
Right.
Keep doing well. Keep paying me those qualified dividends. That's a good way to do it.
I bought your stock because I want your company to do well so that you get other people to buy your stock. So your stock price goes up so we all make more money. Unless you're a day trader and you put a put or a short on a stock that you think is going to go down and you want them to do bad. But I mean, that's cynical.
Or it's like Rio where the miners were revolting and are like, screw you. That's not good. Don't do that. Treat your people right. But here's the
we'll get AI robots to go do it for us.
I think we should look at Disney too, not because I'm going there, but because I think we should check them out. I am so terrified of the price of food at Disney.
It's gonna suck. You're just gonna have to suck it up and pay it.
I'm gonna figure a way around it, and it's gonna be some gross thing like I figure out how to put a sandwich inside my shoe.
Give me Guru grape sandwiches.
They can't flag me on the way in. It's like, why is your shoe squishy? No reason. No.
Just get the food plan that they have. You could find deals on that.
It's only $10 a fry instead of 50.
Right.
Oh boy. All right, I think that's all I got. We'll probably look at some more companies. I had a bunch of weird stuff here, like the countries making the most millionaires. People think, the United States is terrible. Really? Okay, here, look at this.
441,000. And the next one is 43,000 UK.
10 times. Capitalism does actually work if people understood how it works.
Let's see here. How many of these countries are communists?
China's in here, I think.
China.
Yeah, they're in here.
But they're more of a democratic, or not a democratic, but they're a capitalist communist.
I think they're really oppressive. I think the reason why they're here is because they have so many people that live there.
Yeah.
Because, I mean, look how small Taiwan is by comparison. And look how many they've minted over China.
Yep.
China has like 1 billion people. Taiwan has what? What's the population of Taiwan? I think it's only like 10, 20 million. Yeah, 23 million people.
23 million.
So that's a big tell. 1.42. That's not even Taiwan isn't even not even on their list.
What about South Korea?
Here's a cool chart. South Korea. I don't know. Are they in this chart?
Yeah, they're above China.
Oh yeah, because they're full capitalistic now, aren't they?
Yeah.
51.
51 million. Yeah.
Yeah. See, that capitalism doesn't work. Yeah, it does. Just
It works.
If we have more people that actually understood how it works and our educational system actually taught people how it works, it might work a little better. Especially that Warren Buffett rule of just make anybody who can't balance the budget is ineligible for re-election. That's awesome.
We need capitalism, but also still be nice to others. Be nice to people. You can still have capitalism. Greed is good, right? Roman gecko, but you still can be nice to each other. We can all make money together.
We'll see. Population demographics are going to be a problem soon. Here's the government debt. This is the next chart. Value of the debt is the most, but we are not the highest as far as the debt is the share of GDP. But look how many of these numbers are over 100. It's not good.
There's a lot.
Debt-driven planet. I would say society, but it's like every country.
China's in there.
Yeah.
But you know what? I don't see Russia.
They're probably not telling anybody.
They're in the millionaires one.
Are they even on the right side? I don't think they are. Oh, they are. They're somewhere down below.
Oh, yeah, Russia. Oh, there it is.
Value of that. Okay, wow. As a share of GDP, they have a lot of resources. You can see it. Capitalism works for people who are willing to work. Amen. Except the willing to work has been, I don't know, I shouldn't say it was like bastardized over the past 30 years. Let's go to the next one. We talked about 3M stock. We looked at them, so we don't need to keep looking at this. And then we had IBM exploding in a bad way.
They got wiped out.
Yeah, these were things that we were going to talk about if we didn't get rabbit trailed, but we did. So it was my fault. Yeah, so IBM took a big dump, and I own them, so I'm thinking maybe I should buy some more.
Big $68 billion dump.
Yep. And then we had, I think that was it. That was all we had.
We did the things.
Who is this? Oh, yeah. Wall Street is selling more rental homes as buying ban takes effect. That is a good thing for the housing market. For single-family homes, it's a good thing. Trump nailed he hit it right on the head with that one. I don't always agree with that guy, but this is one thing that I think he was right about. So we'll cover that later. Maybe it'll be in an article this week. Oh, then here's a depressing thing about Patreon laying off 20% of its staff. Basically means that if we set up a Patreon that we're not going to get paid, but I think it's because they're getting competition is what it is.
Well, that's why we went with Kajabi.
Yep. Anything else before we go? Any other comments? Is that it?
Matt, if you sign up for Kajabi, let me know how it goes. I got to set up a dummy account and try it.
Yeah, we need to work on that. There's a lot of like training videos and things that we should do. We should probably put up a separate forum so we can post research into things. What I'd like to do is get a community of people that are looking at individual companies, and then we can actually analyze them a little bit more in the stream itself. But I want to have that ahead of time.
Discuss it together,
Yeah.
in Kajabi and things that we won't talk in the stream.
Yeah, not during the stream. I want to prepare beforehand, like it's actually a thing. And I think with that
takes time. We need time.
Got to get paid. Carissa Codell. I'm gonna look up this voice, Matt. I'm gonna do it for you. I want to see what she sounds like.
I won't be able to hear.
Nope. All right. Well, I think with that, next week we'll dig a little bit deeper. We need to figure out something that we're going to buy in amidst a recession. Spartacus and Matt, thank you for the comments. We appreciate you guys.
Absolutely.
Yep. We will be.
We're going to raid somebody.
Oh crap! I got to do that. Yeah. Okay. Was the last raid last week, was that good?
Oh, they never said anything, but
All right.
like the moderators thanked us. So the channel moderator, we don't have moderators. I'm the moderator, I guess.
You can see how much we get paid on Rumble.
But there you go. Not a lot.
A whole dollar. I made $1. No, we need to go to.
You gotta go to the chat. Go to home. Upper left. There you go.
Oh, you guys want to listen to Roseanne Barr?
Oh, we could do Roseanne.
All right, I gotta click this. Let's click on it. Who's Patrick Byrne?
I have no idea. Patrick Byrne.
All right, so then I gotta copy this, and I have to go to here. Oh wait, I gotta go to chat.
Go to our chat.
Our chat. Where's our chat? I have a window open here somewhere. Where'd it go?
Killing me, man.
I know I am. It's good. It's good for your character.
You're killing me, Smalls.
Unless that killed the stream already. Oh, did I kill the stream by... I don't think I did. Here, I'm going to copy this. We're going to go back. We're going to go to the live thing. Yeah, going to go back to the stream. Isn't he the Overstock guy? Yeah, I think he might be.
Maybe. Slash raid.
Boom. All right, everybody. Thank you. We will see you next week sometime around lunchtime.
Yes. Have a good vacation, Spartacus.
We'll see you next week.
Yep.
Bye-bye.
Happy streaming. Happy investing. I don't know.
All right, now we've